Good morning. So I had given you some background with respect to question number 10 yesterday. So let's quickly go through this question number 10 and solve the question. X purchases the land measuring 30 acres in April 2000. So this land is purchased in April 2000. So it is purchased prior to 1st April 2001. 50 lakh is the cost acquisition. Definitely, since it is acquired prior to 1st April 2001, examiner should give you fair market value of this land on 1st April 2001, and this is given as 60 lakh 60. 2008-9, he has commenced a real estate business and has introduced this land as capital. Value recorded in the books of the firm is 140 lakhs. Value recorded in books is 140 lakhs, whereas fair market value as on the date of introduction of this land in the business is 125 lakhs. Which value is relevant to us? Should we take into account the value recorded in the books, or should we take into account fair market value? I will recap the provision for you. Listen to me carefully. Section 45 subsection 2, conversion of capital asset into stock in trade. See, I took an example saying that gold jewelry was acquired for 50 lakhs in the year 1516. Then in the year 1819, Manoj started jewelry business. When he started jewelry business, he passed an entry in the books of account at 80 lakhs. Stock in trade account debit to capital account. This 80 lakhs is the value at which entry is passed in the books of accounts. Thereafter, the jewelry is sold in 2021 for 100 lakhs. Question is, should we calculate capital gain? Should we calculate PGBP income? For that, I told you that section 2 clause 47, which is definition of transfer. In that definition of transfer, one point is conversion of capital asset into stock in trade is considered as transfer. So yes, there has to be a capital gain, but at the same time, we need to also refer to section 45 subsection 2. Section 45 subsection 2 says, when the capital asset gets converted into stock in trade, you calculate the capital gain not in the year of transfer. Generally, we calculate capital gain in the year of transfer, but this time you don't calculate capital gain in the year of transfer. You calculate capital gain in the year in which converted stock in trade is sold. So in our example, year of conversion is 1819, but capital gain will be calculated in which year? It will be calculated in the year 2021. It will be calculated in the year 2021. So we have shown the calculation here, previous year 2021, corresponding assessment year will be 21-22. Our discussion with respect to calculation of income will be divided in two parts, capital gain and PGBP income. In capital gain, first of all, you have to take the period of holding. The period of holding will be taken from which year to which year? 1516 to 1819. 1516 is the year of acquisition. 1819 is year of conversion. So you have to take from 1516 to 1819. Is that more than 36 months? Yes. So it is a long-term asset. You calculate long-term gain. What should be taken as full value of consideration? See what we have taken as full value of consideration. Have we taken the book value? Book value means the value at which entry is passed in the books of accounts. In our example, the entry was passed in the books of account at what price? 80 lakhs. That 80 lakhs should be ignored. What should be taken into account? Fair market value should be taken into account. You should take into account fair market value. So we have taken fair market value, which is 70 lakhs. So you have taken fair market value here. From that you deduct the amount of cost acquisition, which is 50 lakhs. On that you apply the indexation if it is long term. Correct? Yes or no? Please respond. Next, business income. Business income will be calculated in the same year, that is previous year 2021. Selling price at which the jewelry is sold, 100 lakhs, will be considered as selling price. What should be considered as cost price? Fair market value on the date of conversion. Whatever is taken as selling price in capital gain will become the cost price in business income calculation. So your profit is 30 lakhs. Yes? Now you look at this question and tell me whether we should take into account 140 lakhs or whether we should take into account 125 lakhs. How much value should be taken into account? Akshaya, fair market value should be taken into account. So what is that fair market value? 125 lakhs. So this 140 lakhs should not be taken into account. You need to be very careful. 140 lakhs should be ignored. What should be taken into account is 125 lakhs. Further, next sentence says he incurs an expense for the development of land and approval of housing plots in the land to the extent of 14 lakhs. Can you tell me this expenditure of 14 lakhs is incurred before converting your capital asset into stock in trade, or it is incurred after converting your capital asset into stock in trade? When this expenditure is incurred, 14 lakhs. If it is incurred before converting the capital asset into stock in trade, then it should be taken into account in capital gain calculation. It should be considered as cost of improvement. If it is incurred after conversion of capital asset into stock in trade, then that 14 lakh is required to be taken into account while computing business income. So definitely it is incurred afterwards. So we should take into account while calculating business income. We should not take into account while computing capital gains. Further, it says compute the capital gain and business income for the assessment year 2021 and 2021-22 in the following cases. Assessment year 2021 means previous year 1920, and assessment year 21-22 means previous year 2021. So basically they are asking you to calculate the income for 2 years, that is previous year 1920 and previous year 2021. Point A, the entire plot of land in 10 acres. See, this point A now talks about 10 acres. If you refer to the question, first line was saying 30 acres. So every information given in the above paragraph is for how much? 30 acres. But the moment you move on to point number A, it says plot of land in 10 acres is sold during 1920 and 2021 in the ratio of 40% and 60%. So number one, what is sold is only 10 acres. Number two, that too it is sold in two parts. 40% of 10 acres, that is 4 acres, is sold in 1920. 6 acres is sold in 2021. Yes, is that very much clear to you? Before we actually move on to solve the question, first of all tell me, have you understood this? See, every one of you should respond. We are in an online lecture, so unless and until you respond, I will not come to know whether you understood or not. So continuously you should respond. In a time span of 6 hours, I should have at least minimum 1200 messages. There should be at least 20 messages a day minimum. So 10 acres of land is sold in the 1920 and 2021 in the ratio of 4:6, 40% is to 60%. That is 4 acres and 6 acres are sold. This is sold at a consideration of 240 lakhs. So this 240 lakh is not the consideration for 30 acres. This 240 lakhs is consideration for 10 acres. Calculation is required to be done in 2 different years. So this 240 lakhs should also be bifurcated into 40% and 60%. Now point is, in point number A, they are talking only about 10 acres. What about the remaining 20 acres? That remaining 20 acres is unsold. Remaining 20 acres is unsold. And very important point to be noted is, when this stock in trade is unsold, when the capital asset which is converted into stock in trade remains unsold, no PGVP income, no capital gain, nothing will be calculated. Because capital gain, PGVP income both will be calculated only in the year in which this converted stock in trade is sold. So in point A, we should write a note at the end of the solution that remaining 20 acres, no business income and no capital gain will be calculated because that 20 acres is unsold. Now let's move on to part B of the question, that is case B. It says entire plot of land of 30 acres are unsold. Yes. Point number B is a separate and independent question. It says what is the situation if entire plot of land of 30 acres is unsold? In that case, what is the answer? No business income, no capital gain. Why? Because capital gain will arise only in the year in which converted stock in trade is sold. Is that very, very clear? So, shall we proceed? Yes. So, let's move on to calculate the in your textbook. You can move on to which page? Page number 222. Here we have question number 10. So you have to keep open two pages simultaneously. That is page number 187 and page number 222. Now listen to me carefully. First of all, we are discussing only the first case. That is case A. In case A, what is sold is 10 acres. 10 acres is sold. And this 10 acres is sold in two parts. Previous year 2021, 4 acres, 1920, 4 acres, and 2021, 6 acres. So first we are doing the calculation statement showing net income for the assessment year 2021. That is previous year 1920. When 4 acres of land is sold. When 4 acres of land is sold. Now first of all we will do the calculation of capital gain. In this period of holding will be taken from which year? This plot of land was acquired in which year? April 2020. April 2000. That is given the first line. So that is the year of acquisition, 2000 to 2001. And what is the year of conversion? 2008-9 is the year of conversion. Plot of land is a capital asset falling into second category. Period of holding applicable is 24 months. Here it is more than 24 months. So it is long-term capital asset. We need to calculate long-term capital gain. Full value of consideration should be how much? Full value of consideration should be taken as how much? Fair market value on the date of transfer. Can you tell me what is fair market value on the date of transfer? What is fair market value on the date of transfer? Quickly. ₹1 crore 25 lakhs. Correct? Yes or no? Okay. This for how many acres? 10 acres. We need for this for 10 acres, 125 lakhs. Akshaya, 125 lakhs is given where in line number 4. The first paragraph entirely talks about how many acres? $30 acres. We need for 4 acres. So it should do what? 4 upon 30. Akshaya, have you understood? This 125 lakhs is not given for 10 acres, it is given for 30 acres. Give me the amount quickly. Yes? 125 lakhs into 4.30 will give you how much? $16 lakhs, 66,667. So that I should write in the second column. 16 lakhs, 66,667. Expense on transfer. I do not have expense on transfer. See that 14 lakh which is given, that 14 lakh is incurred after converting your capital asset into stock in trade. So that should be taken into account while computing business income. So my net consideration would remain the same at 16,66,667. Index cost acquisition. Forget about index cost acquisition. First of all, tell me what is cost acquisition? My cost acquisition is 50 lakhs. Yes or no? My fair market value on 1st April 2001 is how much? 60 lakhs. What should be taken into account? Whichever is higher. So I should definitely take into account 60 lakhs. Now tell me, this 60 lakhs is for how many acres? 30 acres. I am doing calculation for 4 acres. So 4 upon 30. You also know that this is a long-term asset. So you need to apply the indexation. Numerator index will be what? Index number of the year of conversion. What is year of conversion? 2008-9. What is the index number of 8-9? Yes. Don't take the indexation up to 2021. Because when you sold off in 2021, it is not a capital asset, it is stock in trade. So 137 divided by indexation for 2001 to base year, that is 100. Yes, get me the amount very quickly. Is it 1096? Okay. Index cost acquisition is 10,96,000. See, I am not calculating, I am relying on you. Index cost of improvement is not given. So let me take this amount to the second column. $10.96. Get me the amount of capital gain. 5,70,667. 570,667. Now let's move on to business income calculation. At what price this plot of land is sold? 240 lakhs. Yes or no? 2 crore 40 lakhs. This is for how many? First of all, have you understood the calculation of capital gain very clearly? Yes, okay. Now let's move on to business income calculation. Selling price is how much? 240 lakhs. This for how many acre? This for how many acre? 10 acre. I need for only 4 acres. So into 4 upon 10. This will give me how much? 96 lakhs. From that I should deduct purchase price. What is purchase price? Nothing but fair market value on the date of conversion. Fair market value date of conversion. That was 16,66,667. This was taken as full value of consideration while computing capital gain. Same amount should be taken as purchase price while computing business income. So I'll write here 16,66,667. Next is expenditure on development. Expenditure on development. Can you tell me what is that expenditure on development? Have you incurred some expenditure on development? Or have you incurred any expenditure after converting your capital asset into stock in trade? Yes, 14 lakhs. Once again, this 14 lakhs is incurred for how many acres? I need for 4 acres. But this is for how many acres? This cost is incurred for how many acres? It is incurred for 30 acres. See, every information given in the paragraph is given for 30 acres only. Only when you refer to point number A, they are talking about 10 acres. So get me the amount, how much it is? 1,86,000. $667. Yes. Now take the total 16,66,667 plus 186, 667. Quickly, how much time you are taking? $18,53,334. Take it to the second column. 18,53,334. This should be deducted. So get me the business income. 77,46,000. $666. Now get me the net income. Net income means total income. My capital gain is 5,70,667 and my business income is 77,46,666. So what is the net income? 83 lakhs. 17,000. 333. 83 lakhs 17,333. Now, have you all understood this part? Yes or no? Yes. Now I can give you maximum 1.5 minutes time. You need to get me a statement, income amount for the previous year 2021. That is corresponding assessment year 21-22 and that is for 6 acres. I can give you maximum 2 minutes time. See, listen to me. Take this as part of homework. If you have got the answer, excellent. I am giving you the shortcut. Listen to me. Whatever calculation you have done in case A for the previous year 1920 corresponding assessment at 2021 is done for how many acres? 4 acres. Now we are required to do the same calculation. Everything is same. It is just that instead of 4 acres, you have to replace it by 6 acres. So everywhere, wherever 4 is appearing now, you replace that 4 with 6. In other words, your final answer will be what? 83,17,333 divided by 4 multiplied by 6. Because here in the calculation of capital gain, indexation is only till 8-9. Your previous year has changed, but it will not have any impact because indexation you are required to take only till the year of conversion. So everything is going to remain the same. You can just calculate the final amount of income. 83,17,333 divided by 4 multiplied by 6 will be how much? Yes? $83,17,333. Get me the amount. How much time it is taking? 1,24,76,000. Excellent. This is the correct answer. So people who have calculated capital gain, I am just telling you the amount. It is 8,56,000. Capital gain, the amount is 8,56,000. Business income, the amount is 1,16,20,000. So your net income is 1 crore 24 lakhs 76,000. You pick up this amount, divide it by 4, multiply it by 6, you will get the same amount. So now we can do this as part of homework. Let us proceed. This calculation we have done for how many acres? In previous year 1920 for 4 acres. In previous year 2021 for 6 acres. What about the remaining 20 acres? That is unsold. So I am writing a note here. Since the balance 20 acres are unsold, there are no tax implications. There are no tax implications. Have you understood this? Okay, let us proceed. Case B. Case B says if entire 30 acres of land is unsold, then as per section 45(2), if a capital asset is converted into stock in trade, capital gain is taxable in the year in which converted stock in trade is sold. If entire plot of land is unsold, then there are no tax consequences, neither in 2021 assessment year nor in 21-22 assessment year. No capital gain, no business income. So with this we have done this question. Now let's move back to page number 186. Conversion of capital asset into stock in trade we have discussed. What we have discussed? Conversion of capital asset into stock in trade. So when your capital asset gets converted into stock in trade, what calculation you have to do? You have to calculate capital gain or you have to calculate business income. Answer is you have to calculate both. Now this one situation is discussed with you. The other situation is if you convert your stock in trade into capital asset. Say for example, Manoj is having jewelry shop. So whatever jewelry is there in the shop is a stock in trade for him. Now Manoj's wife is visiting the shop and she is taking away 3 gold chain. So gold chain taken away by Manoj's wife. Now it is kept at home in the locker. In the shop, when it was lying in the shop, it was a stock in trade. Now it is taken at home. So for business it is drawings. And now it has become a capital asset. And in future if it is sold, you have to calculate capital gain. Exactly opposite situation. Exactly opposite situation. Conversion of capital asset into stock in trade is one situation. Conversion of stock in trade into capital asset is another situation. So in that case, what you have to do? You have to calculate business income. You have to calculate capital gain. Business income will be calculated. Listen to me very carefully. When your stock in trade gets converted into capital asset, I don't have a practical question on this. So listen to me carefully. When your stock in trade gets converted into capital asset, you have to calculate business income in the year of conversion itself. 45(2) says that you calculate capital gain and PGEP income in the year in which stock in trade is sold. That is applicable only when the capital asset is converted into stock in trade. But if your stock in trade is converted into capital asset, then first of all you have to calculate business income. First of all you have to calculate business income. So there has to be a section in PGEP chapter. Is there any section? Yes. For computing PGEP income it says section 2 clause 24 subclause 12a. This is the definition of income. And section 28 clause 6a. This is the charging section of PGEP income. You calculate the business income in the year of conversion itself. You will not wait for the capital asset to be sold. You will calculate the business income in the year of conversion itself. So as per section 2 clause 24 subclause 12a, fair market value on the date of conversion is considered as income. Same thing, na? Fair market value was also considered there also. There it was considered as full value of consideration for computing capital gain. And it was considered as cost while computing business income. Here, that same fair market value on the date of conversion is considered as selling price for calculating business income and will be considered as cost of acquisition for computing capital gain. That's all. Opposite situation this. So this fair market value on the date of conversion is considered as income, and as per section 28 clause 6a, this fair market value on the date of conversion determined in accordance with rule 11 UAB is taxable as business income. Rule 11 UAB is not part of your syllabus, but this fair market value should be taken into account for computing business income. That fair market value is nothing, but it is as good as a selling price of that stock in trade. Next, for computing capital gain, you have to keep in mind following points. Number one, period of holding. Period of holding should be taken from which year to which year? From date of conversion to the date of transfer. Year in which you have converted your stock in trade into capital asset, that is the starting year for capital gain. Starting date for period of holding. From that date, the date on which you have actually sold your capital asset, that will become the period of holding. Full value of consideration at whatever price you have sold the capital asset, that is gross selling price of a capital asset. What is cost of acquisition? Section 49 subsection 9 says cost of acquisition is nothing but fair market value on the date of conversion. The same fair market value is considered as selling price while computing business income. Same fair market value will be taken as cost of acquisition for computing capital gain. Will you get the benefit of indexation? Yes, if it is a long-term asset. No, if it is a short-term asset. So if it is a long-term asset, take the benefit of indexation. Benefit of indexation will be available from year of conversion to year of transfer. Indexation of cost of improvement, if any, will be available from the year of improvement to year of transfer. Yes, is that very, very clear? Conversion of stock in trade into capital asset. Have you all understood clearly? So we have covered both the situation. Number one, conversion of capital asset into stock in trade, and number two, conversion of stock in trade into capital asset. Both situations are covered. Now let's proceed to previous section, that is section 45 subsection 5 on page number 185 in your book. Page number 185. We are going to discuss section 45 subsection 5. We will be discussing section 45 subsection 5. Computation of capital gain on compulsory acquisition of capital asset. Listen to me carefully. Section 45 subsection 5. Now say for example, this is the route through which Chennai Metro is going to start. Say for example, there is one more metro getting developed in Chennai. It has to go through this route. So on the map they have made it through which route the metro will move. In between this route, everything is clear, but there is one house belonging to Manoj. So now Chennai Metro Corporation or Chennai Municipal Corporation, who is into metro construction, is having two options. Option 1, scrap the metro project, forget about it. Option 2, ask the Manoj to get shifted somewhere else, demolish this house and develop the metro. What should be done? Yes. Should we scrap the metro project because Manoj's house is coming between that route? Or should we ask Manoj to get shifted somewhere else? Definitely we should ask him to get shifted somewhere else. So in that case, government will go to Manoj. Government will go to Manoj. And government will say that we want to acquire your residential house property. We want to purchase your house property because in that route we have planned a metro project. So only your house is within that route. So we want to purchase your house property. Then we'll demolish it and then metro will be developed. We will pay you money for that. So Manoj says, no, I don't want to sell my house property. Government says, we have not asked you whether you want to sell it or not. We are just informing you that we are going to purchase. So question is, can government purchase someone else's property without his consent? Answer is yes. Such law is already existing in the country. So government can forcefully purchase someone else's asset. That is called as land acquisition. There is a land acquisition law in this country. So say for example, government forced Manoj to sell his house and compensation is agreed. It is decided that government will pay compensation. Government will pay compensation. Now, let me tell you that Manoj had acquired this house in the year, say 2011-12. This is year of acquisition. And cost of acquisition is say 5 lakhs. Government has compulsorily acquired Manoj's house, saying that we want to buy a property, evacuate this property. Manoj has evacuated. Now this house is demolished. This house is demolished and metro work is in progress. All this happened in financial year 15-16. Financial year 15-16 is called as year of compulsory acquisition. Year of compulsory acquisition. Now the question is, Manoj's house is taken away forcibly, that is okay. Compensation is given to him. Compensation is agreed. Say for example, compensation is 20 lakhs. 20 lakhs compensation is decided. But the point is, will he be required to calculate capital gain and pay tax on that? Manoj says that I have not transferred my property willingly. Why should I calculate capital gain? Forcibly, on one hand you are taking away my property forcibly, on other hand you are asking me to calculate capital gain, useless people. Can Manoj argue in this manner? Answer is yes, people were arguing earlier and courts were giving decision in favor of SSC saying that they have not sold their property willingly. Government has taken over forcibly. If there would not have been any metro project here in this route, then they would not have sold the property. There would not have been any capital gain. So cases were decided in favor of the taxpayer. Government did not like this. Therefore, government came out with new section in the Income Tax Act. Section 2, clause 47, definition of transfer was amended. Section 2, clause 47, definition of transfer was amended. Definition of transfer says transfer in relation to capital asset includes number 1 sale, number 2 exchange, number 3 relinquishment, number 4 extinguishment. Now it also includes conversion of capital asset into stock in trade. It also includes compulsory acquisition of capital asset. So section 2 clause 47 was amended and compulsory acquisition is considered as transfer. But can we calculate capital gain in the year 15-16? Government says we can calculate capital gain in 15-16, but he should have money to pay the tax now. Government has just promised 20 lakhs to him. Government has not actually paid. So if you calculate capital gain in the year 1516, that is the year in which compulsory acquisition took place, then the SSE will not have money to pay the tax. SSE will not have money to pay the tax. Therefore, government came out with one more section in the Income Tax Act, that is section 45, subsection 5. Section 45, subsection 5 was inserted in the Income Tax Act to explain you how the capital gain is required to be calculated in such a situation. How the capital gain is required to be calculated in such a situation. Now, the kid is saying, Mr. accrual basis, na capital gain accrual basis. So that is the point, Dixit. In this section, that itself is the point. Generally, capital gain is required to be calculated on accrual basis. But when you convert your capital asset into stock in trade, we did not calculate capital gain on accrual basis. We calculated in the year in which stock in trade is sold. Similarly, here we have section 45, subsection 5, which says that instead of accrual basis, you will have to calculate capital gain on receipt basis. So section 45, subsection 5 says you have to calculate capital gain on which basis? You have to calculate capital gain on receipt basis, because only in the year of receipt of compensation, SSE will have money to pay the tax. There is no point in doing the calculation of capital gain if SSE does not have the money to pay the tax. He will get money only when he is getting the compensation. So only in that year he should levy the tax. So new section was inserted in section 45, subsection 5. Why there was a need of new section? Because if we do not insert this section, then capital gain will be taxable on accrual basis in the year 1516 itself. You calculate capital gain in 1516. Manoj will not pay tax, saying that I don't have money, do whatever you want to do. Therefore, intentionally government came out with section 45, subsection 5, saying that in case of compulsory acquisition, you calculate capital gain in which year? In the year of receipt of compensation. In the year of receipt of compensation. Now say for example, this 20 lakhs is the compensation. Out of 20 lakhs, say for example, 15 lakh is received in financial year 18-19 and 5 lakh is received in financial year 19-20. So this compensation is received in two parts, two installments. So in which year you will first of all calculate the capital gain? First you will calculate capital gain in the previous year 18-19. What is previous year 18-19? It is the year in which compensation is actually received. It is the year in which compensation is actually received. The compensation which is agreed at the beginning is called as initial compensation. Is called as what? Initial compensation. So this 20 lakhs will be termed as initial compensation. Previous year 18-19, you have to calculate capital gain. Now you tell me, first of all, what should be taken as period of holding? Period of holding should be taken from which year to which year? Definitely from 11-12. That is year of acquisition. But up to which year? Should we take up to 15-16 or should we take up to 18-19? Yes. So answer is we should take up to 15-16 only. Why? Because after 15-16 the capital asset do not exist. After the year 15-16, capital asset do not exist. Government has compulsorily taken over that asset and that asset is already demolished. It do not exist only. So you have to take period of holding from the year of acquisition to the year of compulsory acquisition. Year of acquisition to year of compulsory acquisition. Now tell me what should be taken as full value of consideration. Government says take entire amount of compensation. Take entire amount of compensation here. Even if you have received in part, you take the entire amount. What is the entire amount? 20 lakhs. Then you do the calculation in normal manner. Whatever is your cost acquisition 5 lakhs, take that 5 lakhs, apply the indexation, calculate the index cost acquisition, calculate the capital gain. That's all. Is that very clear? Yes? Please respond. Okay. Now tell me, previous year 1920. In previous year 1819, how much amount was received? 15 lakh was received. Previous year 1920, 5 lakhs is received. Should we calculate capital gain once again in 1920? No, because it is already computed. Last year itself, when you calculated capital gain, you took into account 20 lakhs, na? So already it is computed. Capital gain is already computed. Yes, is that very clear? Shall I proceed? Now say for example next year is 2021. Mr. Manoj goes to court saying that my property is compulsorily taken over. Government compensated me 20 lakhs, but the actual value of my property was 40 lakhs. Actual value of my property was 40 lakhs and government compensated me only 20 lakhs. So court is asking Manoj, why did you agree? Manoj said, I did not have any other option. They forcibly took away my property. In a democratic country like India, they forcibly took away my property and they gave me the letter saying that we will compensate you 20 lakh rupees. So if I would not have accepted, I would not have got the 20 lakhs also. So court will appoint an officer. Manoj has gone to the court. Definitely from the side of the government also, there would be some representative. Generally, it would be land acquisition officer. It would be land acquisition officer. So now Manoj has filed a case in the court of law. Court has appointed a valuer saying that get us the value of the property. What is the actual value of property? So maybe for example, Manoj has submitted the evidence. Forget about valuer. Manoj has gone to the court and he has submitted the evidence. He has submitted the evidence to prove that the value of property is not 20 lakhs, it is 40 lakhs. And court is convinced. Court is convinced. So court has passed an order. Court has passed an order. Court has passed an order saying that compensation should have been 40 lakhs. This copy of order will be given to government, will also be given to Manoj. So in this case, what will happen? Now government will have to pay extra. How much extra? Government has already paid how much? 20 lakhs. But court decided the compensation to be 40 lakhs. So how much now government has to pay to Manoj? More 20 lakhs. Say for example, government paid 20 lakhs in financial year 2021 itself. So once again Manoj will have to calculate capital gain. This additional 20 lakhs is called as enhanced compensation. This is called as what? Enhanced compensation. Or you can also call it as additional compensation, extra compensation. So in previous year 2021, you have to calculate capital gain. year in which enhanced compensation is received. Period of holding will be taken from which year to which year? Same to same. 11, 12 to 15, 16. 11, 12 to 15, 16. Because capital asset was in existence only for this period. After 15, 16, capital asset do not exist. What should be taken as full value of consideration? 20 lakhs. What is that? Amount of enhanced compensation. Amount of enhanced compensation. Do you have any expense on transfer? Yes, you can take expense on transfer here. What can be taken as expense on transfer is nothing but litigation expenses. Manoj had filed the case in the court of law, na? So he might have paid some fees to his lawyer. So whatever fees he has paid to the lawyer is called as litigation expenses. That litigation expenses should be taken as expenses on transfer. For example, let us say that it was 1 lakh rupees. So deduct this 1 lakh, net consideration is 19 lakhs. From this I should deduct index cost of acquisition, index cost of improvement. Can you tell me what should be taken as index cost of acquisition, index cost of improvement? Yes, this is the information in front of you. What should be taken as index cost of acquisition or index cost of improvement? Manoj had acquired property for 5 lakh. Should I take 5 lakh once again as index cost of acquisition? Should I take 5 lakh into calculation of capital gain? Answer is no. Why? Because last time when I calculated capital gain on receipt of initial compensation, entire amount of cost of acquisition and cost of improvement would have been claimed as deduction, na? So if I take it once again, that will amount to double deduction. Therefore, nothing should be taken as cost of acquisition, cost of improvement. Because while calculating capital gain on receipt of initial compensation, already cost of acquisition and cost of improvement is taken into account. If you take into account once again, that would amount to double deduction. So cost of acquisition, cost of improvement will be 0 and the balance will be capital gain. 19 lakhs in our example. This capital gain will be short term or long term depending upon the original capital gain. Depending upon the original capital gain. Our original capital gain was long term because period of holding was more than 12 months. So this one will also be long term. Yes, have you understood till now? Yes or no? Yes. Now listen to me carefully. Listen to me carefully. Once again, Manoj goes to court. Once again, Manoj is going to court. Now this time what Manoj is explaining to court, na? My property is compulsorily acquired. In which year my property was taken over? In the year 15-16, my property is taken over. They paid me compensation of 15 lakhs. In which year? 18-19. So 18-19, they paid me 15 lakhs. 19-20, they paid me 5 lakhs. Then I filed a case in the court and court then increased the amount of compensation from 20 lakh to 40 lakhs and the extra 20 lakhs was given to me only in the year 2021. Now Manoj says that if I would have sold my property in the financial year 15-16, my property is transferred. It is compulsorily taken over by the government. Instead of that, if I would have sold My property in the financial year 15-16 na. The entire 40 lakhs I would have received in 15-16 only. Instead of government taking over this property, if I would have sold this property na, then entire 40 lakhs would have been received by me in the financial year 15-16 only. So government has paid me this 15 lakh late by how many years? Instead of paying in 15-16, they paid in 16-17, 17-18, 18-19, late by 3 years. This 5 lakh they paid late by 4 years. This 20 lakh they paid late by 5 years. So actually government should pay me interest on this compensation. On 15 lakh government should pay me interest for 3 years. On 5 lakh government should pay me interest for 4 years. On this 20 lakh government should pay me interest for 5 years. That is what Manoj is claiming in the court of law. And court felt that Manoj's argument is correct. So court has passed an order. Court has done the calculation, saying that fixed deposit interest rate is say 7%. So court has taken into account 7% per annum interest rate and they have calculated interest on these amounts. Now say for example, on this they have taken say 20%, 3 lakh rupees. On this they have taken say 1.5 lakhs. On this 20 lakh they have taken say 6 lakhs or say 6.5 lakhs. 6.5 lakhs. So court says you pay this interest to Manoj. 3 lakhs, 1.5 lakhs and 6.5 lakhs. How much it is? 11 lakhs. So court says pay this interest of 11 lakhs to Manoj. Because you have paid money late na. You would have paid entire 40 lakh in 15-16 only. Why you made the payment late? You had acquired his property in 15-16 na. So you should have compensated him entire 40 lakhs in financial year 15-16 itself. Now you pay the interest. So what is the consequence? Mr. Manoj is receiving interest from the government. Government is paying interest to Manoj. Do you believe this interest is a consideration for transferring the capital asset? Do you believe this interest is a compensation for transferring capital asset? No, not at all. For transferring capital asset, compensation is already given. How much? 40 lakhs. What is this interest for then? Interest is given for time value of money. Interest is given for time value of money. Now the question is, what tax treatment should be given for this interest? Say for example, this interest is received in 21-22. 21-22. So in the year 21-22, this interest will be made taxable under IFOs, because this interest is not a compensation for property. This interest is a compensation for time value of money. It is not a compensation for transferring the capital asset. So in the head of income from other sources, this interest should be taken. Interest on initial compensation, enhanced compensation, 11 lakhs. This should be also taxed on receipt basis. This is also taxable on receipt basis. From this you are going to get a standard deduction. Standard deduction. The way you used to get standard deduction in income from salary, here also you get standard deduction at the rate of 50% of the amount received. Amount received is how much? 11 lakhs. So of that you take 50% standard deduction, that is 5.5 lakhs. Balance 5.5 lakhs. You paid tax under income from other sources. Yes? Have you understood this much? Yes or no? Am I going very fast? Speed is okay na? Okay. So have you understood this interest part? Interest will be taken into account when? Not while computing capital gain. This will be taken into account in IFRS. 50% standard deduction will be available from it. When we move on to the chapter of IFRS, this point will once again come. At that point of time, I will not explain you. I will just tell you that this is covered in the chapter of capital gain. Now say for example, that land acquisition officer, Padmesh, don't worry, I will show you everything. Everything is properly written in the book also, page number 185. And thereafter also, I will show you this from the starting if you want. Don't worry about that. Right now, first of all, let me complete this. You don't go on copying this. You don't copy this. Everything is written in book and it is written in an excellent manner. Believe me. I will refer the notes also in front of you. Yes? So let us proceed with our discussion. Now, say for example, there is a land acquisition officer. Land acquisition officer. Land acquisition officer. Now this time, this land acquisition officer is going to court. This time, the land acquisition officer of the government of India goes to court. Sarvana says what? 1819, how much he will pay? Sarvana, 1819, he will take 20 lakhs into account, na? 1819, 20 lakhs will be taken as full value of consideration. Entire amount of compensation. 1920, that 5 lakh is not taken into account. Sarvana says this is taxable on receipt basis, na? So you should levy tax in the year 1920 on 5 lakhs. But government says it is taxable in the year of receipt of compensation either in full or in part. Along with the word receipt basis, they have used the word capital gain is taxable in the year of receipt of compensation either in full or in part. So even if you received it in parts, na, then also capital gain will become taxable in the year in which you have received the first installment of compensation. Sarvana, have you understood? Yes or no? Now listen to me very carefully. This land acquisition officer has gone to the court saying that the valuation of property which was done by the SSE filed a case in the court of law saying that my compensation is less. Value of my property is 40 lakhs. Whereas government has compensated me only 20 lakhs. So court passed an order saying that you pay him extra 20 lakhs. But now the land acquisition officer is of the opinion that compensation of 40 lakhs is not correct. Because the SSE submitted some information based on which court has given the decision. SSE had submitted, in a Times of India newspaper, once in a week, I believe on Thursday, you get a additional supplementary page called as Times Property. Times of India newspaper, na? You have an additional supplementary page every Thursday that is called as Times Property. Now Manoj had submitted the copy of the Times Property to the court saying that see this newspaper. This is the value of property. So land acquisition officer contacted Times of India newspaper saying that how do you ascertain the value of property? Per square feet price you are giving area wise. So how you are ascertaining? So Times of India said that we are ascertaining on an average basis. So that is wrong, na? Because every property will have a different value. In the same locality also, some properties are premium properties, some are not. Every property will have a different value. So that average price of the property should not be taken into account. You should see what is the nature of property, what is the size of the property, where is the exact location. So this land acquisition officer is of the opinion that SSC has submitted wrong information to the court, and based on that the court has passed the order of giving compensation of 40 lakhs. That 40 lakhs is incorrect. Now this land acquisition officer is asking the court to appoint a valuer. So court has appointed a valuer. This valuer will visit the location where Manoj's property was situated. And this valuer will value the property and submit the valuation report to the court. This valuation report, valuer says the exact value of property is 30 lakhs. So what now court has done now? Court has passed a new order wherein court said that last time we had passed an order saying that compensation is how much? 40 lakh, but it is not correct. Actual compensation should be only 30 lakhs. This order is passed by the court. The copy of the order will be given to land acquisition officer also, and copy of order will be given to Manoj also. So what Manoj has to do? The moment he receives the copy of order, either he has to challenge this order at a higher level, or he has to accept this order. So for example, Manoj has accepted this order. He has accepted the decision of the court. In that case, what Manoj will have to do? Manoj will have to return some amount to the government. What amount government has already compensated him? What amount government has already paid him? 40 lakhs. What should have been paid? 30 lakhs. How much is paid extra? 10 lakhs. That 10 lakh is required to be refunded back to the government. So Manoj is paying this 10 lakh to the government. Now the point is, now Manoj says that, see last time in the year 2021, I had calculated capital gain on enhanced compensation taking into account 20 lakhs. So now I have given back 10 lakh rupees because of the new order of the court. So this calculation is incorrect. So I am recalculating this. So in the previous year, see, for example, court has passed this order in 22-23. Court has passed this order in 22-23, but Manoj is not going to give the effect of this order in 22-23. What Manoj will do now? Manoj will go back to the old calculation, which was done in the previous year 2021. In that old calculation, Manoj will cancel these 20 lakhs. Instead of this 20 lakhs, he will write what? He will write 10 lakhs. So recomputation will be done of the income of 2021. This revised order, new order will not have impact in the year 22. It will not have impact in the year 22-23. It will have impact on the income calculation of which year? 2021. This 20 lakh will be cancelled, 10 lakh will be returned. Plus, in expense on transfer, that old litigation expense which was incurred, 1 lakh, that definitely will write. But along with that, now, since the land acquisition officer had challenged this decision of compensation of 40 lakhs. Manoj will have to ask his lawyer to represent him. For that, lawyer charge 50,000 rupees. So you have to take litigation amount, old litigation expense plus new litigation expense. Now say for example total is 1.5 lakhs. So you deduct that 1.5 lakhs. So it will be how much? 8.5 lakhs net consideration. Cost of acquisition 0, cost of improvement 0. Long term capital gain 8.5 lakhs. So Manoj might have paid income tax to the income tax department on 19 lakhs. Now he is going to get refund of 8.5 lakhs. Definitely along with interest. Definitely along with interest. And that interest which he receives will also be taxed under the head IFRS. Have you understood this much? Yes or no? Now in your textbook, move on to page number 185. Page number 185. Padmesh was asking me, sir, wait, show me the entire discussion. Everything is written here in excellent manner. See, these notes are made, huge amount of efforts are taken to make the notes. Notes are made in such a manner that you need not read the entire paragraph also. You just read the heading of the paragraph and you will come to know what is the provision. You have to read the entire notes in detail only once. Subsequently, when you pick up the notes, you just read the entire, read the heading of the paragraph. That's all. I will not read the entire everything in front of you. I will just read the heading only. See, compulsory acquisition is considered as transfer as per section 2 clause 47. Capital gain is computed as per section 45 subsection 5. This section is applicable when either there is a compulsory acquisition or there is no compulsory acquisition, but the amount of consideration is determined by the central government or Reserve Bank of India. Amount of consideration is determined by the central government or Reserve Bank of India, then also this section will be applicable for the purpose of computation of capital gain. Rizwan, wait for some time. Let me go through this provision first. So this section is applicable when there is a compulsory acquisition, number 1, and number 2, when there is no compulsory acquisition, but the amount of consideration is determined by the central government or RBI. For example, some industrialist is wanting, say, plot of land in a particular area. Then government has acted as an intermediary. Government has convinced those people who are owning the plot of land, saying that this industrialist will pay you compensation of more than what is the market value of this land. So government is just acting as an intermediary. There is no compulsory acquisition. Government is not taking over the plot of land. Government is convincing those people who are owning the land, saying that you sell your land, you will get a premium price. So in that case, we say that government is deciding the amount of compensation or RBI is deciding the amount of compensation. Which government? Central government, not the state government. In that case also, capital gain will be calculated by applying the provisions of section 45 subsection 5. Point 3 says, initial compensation, enhanced compensation will be received for compulsory acquisition. Point 4, taxability of initial compensation, enhanced compensation. When you receive initial compensation, year of taxability will be year of receipt of initial compensation or part thereof. In full value of consideration, you have to take the entire initial compensation, even if the compensation is received in installments. Cost of acquisition, cost of improvement will be as per normal provisions. Enhanced compensation. On this also, taxability will arise in the year of receipt of enhanced compensation. Amount of enhanced compensation will be taken as full value of consideration. Cost of acquisition, cost of improvement will be taken as 0, because it might have been already taken into account while calculating capital gain on receipt of initial compensation. Point 5, litigation expenses can be claimed as reduction considering it as expense on transfer. Point 6. Tax treatment if the enhanced compensation is received by any other person. See point 6, 7, 8, 9. This we need to discuss one line. Point number 7 is going to take some time, but point number 6, 8 and 9 will get completed in 2 to 3 sentences. Listen to me carefully. What will be the tax treatment if the enhanced compensation is received by any other person? For example, this case was going on in the court and the unwanted incident happened and Manoj died. Manoj has died and thereafter the court has passed an order for enhancing the compensation. So enhanced compensation is not received by Manoj. He has already left this world. This enhanced compensation is received, say for example, by Manoj's child. In that case, what will happen? In that case, compensation, if the compensation is received by any other person, it will become taxable as the income of recipient. That amount of compensation received by Manoj's child will also become taxable. To whom? To Manoj's child only, because Manoj is no more with us. So, amount of enhanced compensation, if it is received by any other person because of death, etc., then it will become the income of the recipient. Point number 8 I have discussed with you. Tax treatment of reduction in compensation. Tax treatment of reduction in compensation. What will happen in this case? In our example, compensation was reduced from 40 lakh to 30 lakhs. So it was reduced by 10 lakhs. In that case, what will happen? It will not have any impact on the income calculation of the year in which new order is passed. But whatever capital gain was calculated on receipt of enhanced compensation, that year's income calculation will be revised. And this you are not required to do. This income tax department is going to do. See here, this previous year 2021 you revised the calculation of income, na? That you are not supposed to do. Who will do? Income tax department will do. And there is a time limit for doing this, which is part of section 155 subsection 16 CA final. There is a separate chapter called as rectification of mistake. So in that, income tax officer will go to section 155 subsection 16. According to that section, he will revise the computation of capital gain. When we move on to the chapter of TDS, see point number 8 is over. Point number 9, when we move on to the chapter of TDS, you will learn that when you receive the compensation, on that TDS will be deducted at the rate of 10%. As per section 194 LA. As per section 194 LA, TDS will be deducted at the rate of 10%. So whenever you receive initial compensation, enhanced compensation, this will become taxable to you definitely, but whatever amount you receive now, on that TDS will be deducted at the rate of 10%. Now in this concept, we are left with very small point. That is what I am going to discuss with you. Listen to me very carefully. Now this entire story now I am slightly changing. This entire story I am slightly changing. Listen to me. Can you tell me in which year this property was compulsorily acquired by the government? Manoj had acquired this property in 11-12. Government compulsorily acquired this property in 15-16. Yes? And then Manoj filed a case in the court of law in which year? 2021. Order was passed increasing the compensation from 20 lakh to 40 lakhs. Keep in mind this much information, that's all. Now I am changing the I am slightly changing the same example to make you understand some different point, and that is point number 7. So, year of compulsory acquisition is 2015-16. Compensation was agreed at 20 lakhs. Now say for example, it is 2021. In the 2021, Manoj is going to court. Manoj is going to court. There is a first hearing. Do you understand the first hearing? Means the date is given. On that date, Manoj as well as the land acquisition officer, who is a representative of government, will come to the court and court will start the hearing. So Manoj has submitted some document along with his filing the case. He has submitted certain documents. Before the hearing itself, judges have already gone through the case. Now judges are very confident. See, Manoj is demanding a compensation of say 50 lakhs. Manoj says that government has compensated me only 20 lakhs. Actually, my property value is 50 lakhs. Judges have gone through the documents which are submitted by Manoj. Judges are very much confident that 20 lakh, which is a compensation given by the government, is too less. Judges are of the opinion that 20 lakhs, which is the compensation given by the government, is too less. At the same time, judges feel that the amount which Manoj is demanding, 50 lakhs, is high, is very high. But judges are confident that value of property is more than 20 lakhs. Now judges also know that the case is going on in an Indian court. So case will start and will go on for years. Manoj's property is compulsorily acquired. He is anyway into trouble. Government has compensated him only 20 lakhs. So he is having more trouble. So court says, we don't want to bother Manoj more. So what we are doing now? We will definitely get the valuation of this property done by the valuer and we will give the final decision. But all these things is going to take a lot of time. So what court is doing? Court is passing an interim order. Saying that we are confident that the value of property should be at least 30 lakhs. We are not confident about 50 lakhs, but we very much know that the value of property is at least 30 lakhs. So court has passed an interim order. Interim order means final decision is yet to come. Final decision will be taken after the valuation of the property is done by the valuer, and valuer submits his valuation report. Based on that, final decision will be taken. But all these things would take maybe 6 months time or maybe 2 years time. So court says that we don't want to bother Manoj so much because anyway he is facing hardship. He is into trouble. So let us pass an interim order. Court has passed an interim order. In which year interim order is passed? This interim order is passed in 2021. Now Manoj will get the copy of order. Land acquisition officer will also get the copy of order. And now land acquisition officer is a representative of government. So what government has to do? Government has to compensate Manoj. How much? 10 lakhs. 10 lakhs. Now the point is, this compensation which is received, is it received under a final order of the court? No. that is received only under an interim order. Should this be taxed in the year 2021? So government has come out with an amendment here saying that the compensation which is received under a interim order should not be taxed in the year in which compensation is received. This compensation which is received under interim order, this 10 lakh will not be taxed in the year in which it is received. In other words, will not be taxable on receipt basis. Will not be taxable on receipt basis. Now let us say that court has asked the valuer to do the valuation of property. He has done the valuation of property and he has submitted the valuation report to the court saying that the correct value of the property is 40 lakhs. So, valuer is submitting the report to the court saying that the valuation of the property is done and the property value is 40 lakhs. So now what court will do? Court will pass a final order. Court will pass a final order. In that they will write correct value of property should be how much? It should be 40 lakhs. Copy of this order will be sent to land acquisition officer as well as it will be sent to Manoj. Now what will happen? Manoj was compensated to the extent of 30 lakhs. Now the land acquisition officer will give him more 10 lakhs. Say for example, all these activities, all these things are happening in the year 21-22. So in the year 21-22, final order is passed now. So Manoj should calculate capital gain. When? In the year 21-22. And while calculating such capital gain, what he should take as full value of consideration? Last time when interim order was passed, 10 lakh was received. That 10 lakh was not taken into account. Na? Capital gain was not calculated in that year in which interim order is passed. So this time 20 lakhs will be taken as full value of consideration. This 10 lakhs as well as 10 lakhs compensation received under a interim order. Entire 20 lakhs will be taken into account for the purpose of calculation of capital gain in which year in which final order is passed. Year in which final order is passed. Now read this. Exception. Exception means in this case capital gain will not be taxable on receipt basis. Compensation received in persons of an interim order. Compensation received in persons of an interim order shall be deemed to be income of which year? Of previous year in which final order of the court is passed. So it will not be taxable in the year in which interim order is passed. So if the court is passing an interim order and you are receiving compensation under an interim order, no tax will be levied in the year in which that compensation is received. Capital gain will be computed in the year in which final order is passed. Second possibility is court is not passing any interim order. Directly court is passing the final order. In that year, definitely year in which you receive that compensation under a final order, in that year you have to pay the tax. Yes? So we have completed our discussion with respect to section 45 subsection 5. Now we can move on to question number 8. Question number 8. In your book it is on page number 186. Let us go through this question very quickly. X acquired a house for 2 lakhs. What is this 2 lakhs? Cost of acquisition. This house was acquired in 1999-2000. This is year of acquisition. And since the year of acquisition is prior to 1st April 2001, examiner should give you fair market value on 1st April 2001. The market value of house as on 1st April 2001 is 3 lakhs. So we will ignore 2 lakhs and we will take into account 3 lakh for computing capital gain. The house was compulsorily acquired by the government on 15th March 20. So what is year of compulsory acquisition? 2009-10. This was compulsorily acquired for 8 lakhs and compensation of 7 lakh 20 was paid on 23rd March 21. After 11 years, he has received a compensation. That too, not the entire amount of 8 lakhs, only the amount of 7 lakh 20. And further it says, balance 80,000 was received by him on 15th April 21. So in which year we will calculate the capital gain? The year in which initial compensation is received, either in full or in part. That is which year? Previous year 2021. Very good. Previous year 2021. But period of holding will be taken up to which year? Can you tell me that? Period of holding will be taken from which year to which year? It should be taken from 1920. 1920 up to which year? 910. 910. If the capital asset is long term, then indexation will also be available till 910 only. Indexation will also be available till 910. So definitely this house is a capital asset belonging to second category. Period of holding to be applied is 24 months. So it was acquired in 1999-2000. It was compulsorily acquired by the government in 2009-10. So period is more than 24 months. So it is long term. You take the indexation from 2001 to up to 2009-10. So you will calculate the capital gain in which year? 2021. But indexation will be taken up to 910 only. Further it says, X has filed a suit against the government challenging the quantum of compensation. And court has ordered for giving additional compensation of 1 lakh 50. Court has passed an order for giving additional compensation of 1 lakh 50. On which date this order is passed, on which date the court case is filed, all these things are not given here right now. He incurred an expenditure of 2 lakhs in connection with that suit. So this is nothing but a litigation expense. This can be claimed as expenses on transfer. The additional compensation was received on 14 January 21. 14 January 21 falls in which year? 2021-22. So in this 21-22, you will calculate what? You will calculate capital gain on receipt of enhanced compensation. Capital gain on receipt of initial compensation will be calculated in which year? 2021. Capital gain on receipt of enhanced compensation will be calculated in which year? 21-22. So it is asking you to compute capital gain chargeable to tax. So first of all, let us discuss part A of the question, that is compute the capital gain, that's all. Part B we will discuss later. First of all, let us solve part A. Can you tell me which is that page on that format is given? Question number 8. Format is given to you on page number 221. So you move on to that format, quickly start doing the calculation based on whatever we have referred in the question. Yes. Shall we start? Period of holding should be taken from 1999 and 2002, 14 March 2010. This is more than 24 months. Therefore, it is long-term capital asset and definitely we need to calculate long-term gain. So, next line is statement showing taxable long-term gain. In which year compensation is received? On which date compensation is received? 25th March 2021. That is previous year 2021. So previous year is 2020-21 and corresponding assessment year is 21-22. This is the year in which first installment of compensation is received. But while calculating capital gain, we should take the entire amount of compensation. What is the entire amount of compensation? 8 lakhs. Yes. What is expense on transfer? Some of you may feel that expense on transfer is 2000 rupees. If you believe so, that is totally wrong. Because that 2000 is a litigation expense incurred for filing a case for enhanced compensation. We are doing the capital gain calculation on receipt of initial compensation. So no expense on transfer, net consideration is 8 lakhs. From that, let us deduct index cost of acquisition. What is the actual cost of acquisition? 2 lakhs. What is the fair market value on 1st April 2001? 3 lakhs. What is higher out of both? 3 lakhs. So take into account 3 lakhs. Apply the indexation. Multiply by index number for which year? 2009-10. Numerator index will be of base year 2001-2. Numerator index is 100. Sorry, denominator index is 100 base year. What is the numerator index of 9-10? 148. Yes, 148. So 4,44,000 is the index cost acquisition. 4,44,000. Index cost of improvement is 0. So let me take this amount to the outer column, 4,44,000. So what is the amount of capital gain? 3,56,000. 3,56,000. Yes, have you understood this? Everyone, you develop an habit of responding. Don't sit silent. Everyone, you have paid fees, na? Or you are working, you are coming to class free of cost. Have you paid the fees? Or inside classes is teaching you free of cost? So, you should respond. If you have doubt, you should ask. Only if you value the money which is invested by your parents. If you feel that your father is having huge amount of money, I will do coaching classes once again, then it is up to you. Shall I move on to next part? Tell me, when the enhanced compensation is received? Yes. When the enhanced compensation is received? On 14th January 22. What is that year? Previous year? 21-22. Corresponding assessment year 22-23. What is the amount of enhanced compensation? 1,50,000. Expense on transfer is 0. Net consideration is 1,50,000. Cost of acquisition, cost of improvement should be 0. Your taxable capital gain should be 1,50,000. Yes. So we have completed part 1 of the question, that is point A. For litigation expense we did not take 2,000 rupees. Line number 6. 1, 2, 3, 4, 5, 6. Line number 6. Line number 6, we should deduct litigation expense, na? 2,000. So my net consideration capital gain should not be 150, it should be 148. 148. Your expense on transfer, in the bracket you can write litigation expense for your reference. Litigation expenses. Yes. Shall we proceed? Yes? Super. Let's move on to part B of the question. Now I am not displaying part B on the screen. You refer your textbook. Page number 186. Part B says what? What is the tax treatment if the High Court, by passing an order on 15th March 2023, reduces the compensation by 10,000? So what is the enhanced compensation right now? 1,50,000. It is reduced by court by 10,000 rupees. So the new amount of compensation will be 1,40,000. And excess refunded the said amount to the government on 10th April 23. Expenses incurred to defend the suit were 3,000. So this 3,000 is what now? New litigation expense. Actually it is expense incurred for defending the suit. So in this case what is going to happen? Whatever is the capital gain of previous year 21-22, assessment at 22-23, that year's income will be recomputed. See, order is passed in previous year 22-23. This order will not have any impact on the income of 22-23. Income of 21-22 will be recomputed. Income of 22-23 will not be impacted because of this order. So, tax treatment when the compensation is reduced. In this case, the original capital gain shall be recomputed by reopening the assessment year for assessment year 22-23. Assessment year 22-23 means what is the previous year? 21-22. That is the year in which you had calculated capital gain on enhanced compensation. This can be done. See, this recomputation is required to be done within 4 years from the end of the financial year in which order of the court is passed. This you need not remember because this is part of section 155, which is not there in your syllabus. Section 155, subsection 15, rectification of mistakes apparent from record. You learn this in CA final. Let us move on to the calculation. Full value of consideration. Earlier I had taken how much amount? 1,50,000 in the previous calculation. This I should reduce by 10,000. So full value of consideration this time should be 1,40,000. Expense on transfer. Yes, what is the old litigation expenses? 2,000. What is the cost incurred for defending the suit? 3,000. So total is 5,000. So what is net consideration? 1,35,000. Cost of acquisition, cost of improvement is 0. Your taxable capital gain is 1,35,000. Is that very clear? So last time SSE would have paid a tax on 148, but the tax is payable only on 135. Whatever extra tax he has paid, that extra tax will be refunded back to him. It will be refunded back to him along with interest. And the interest which is received, that will also become taxable under IFRS. That is not interest on compensation, that is interest on income tax refund. Interest on income tax refund is taxable under IFRS. So with this we have completed question number 8. Now I move on to a very small section. Before we have a break, I move on to very small section, section 45, subsection 1A. Dikshit, whatever doubt you have, you can drop the message, I will respond. Now, before we have a break, I am moving on to very small section. Listen to me very carefully. That is section 45, subsection 1A. And after the break, we are going to do a very detailed discussion of section 50C, stamp duty, etc., which is a very important part of the chapter, and that will be helpful in IFO's chapter also. So, after the break, we'll be moving on to a very important section, that is section 50C. Right now, let's move on to section 45, subsection 1A. Now, listen to me very carefully. I am asking you a very simple question. Listen to the question, think about it, and give the answer. Say, for example, I am owning a building. I am owning a building. The place at which the building is located, at that place, one second. Before we actually move on to 45-1A, let me respond to the doubt which is asked by Dikshit. Dikshit, litigation of expense of 2000 is not deducted twice. Litigation expense of 2000 is not deducted twice, it is deducted once only. Whatever calculation you did last time, na? While calculating capital gain on receipt of enhanced compensation. One second. Dikshit, listen to me. How much compensation you received? Enhanced compensation? 150. From that you deducted litigation expense of 2000. Thereafter you said that capital gain is 148. Correct? Now court says that reduce the amount of compensation. Court says the compensation amount is 140. Now we have deducted 2000 litigation expense plus 3000 expense incurred for defending the suit. That is 5000. So our capital gain is 135. See, you are not claiming deduction for 2000 twice. This calculation itself has become invalid now. This calculation, the old calculation wherein you had a capital gain of 148, that has become invalid. Say for example, Dikshit, for example, understood, very good, super. In your school days, teacher used to give you homework, na? And she used to check the homework. And if she realizes that she has given you homework of question number 2, but you have actually done for question number 3, what she will do? She will put a cross mark saying that you do it once again. That is what you have done here. You have done the entire calculation once again. Now let me move on to section 45, subsection 1A. I was asking you a question. I was giving you an example, and at the same time I was asking you a question saying that, say for example, I am owning a building. The place at which that building is located, na, at that place, a earthquake has occurred at a very high Richter scale. And all the buildings which are there in that locality, those buildings, na, some buildings have fallen to the ground, some buildings, partly they are fallen, partly they are standing, some buildings there are huge cracks. So my property is totally demolished in earthquake. But I had taken a smart decision long back. I had insured my property. So I had taken the insurance policy for my property. Now earthquake has happened. My property is destroyed. So insurance company has to compensate me. And insurance company has compensated. Question is, do you believe there should be any capital gain in this case? I had taken out the insurance for my property. That property is destroyed, demolished in an earthquake. Insurance compensation is received. Do you believe there should be any capital gain calculation in this case? Yes or no? See, there were a lot of people who argued in the court of law saying that what insurance company is compensating us is nothing but the loss. Whatever loss we have incurred, that same loss is compensated to us. They are not paying us something extra. Whatever loss has occurred now, that compensation we are receiving. So there is no transfer of capital asset. There is no transfer of capital asset, and we are just being compensated for the loss which we have incurred. So there is no question of gain. Why should we calculate capital gain? And this situation is not in our control. So court gave decisions in favor of the SSE, saying that yes, the amount received from the insurance company is just a compensation for the loss which is already incurred. Here there will not be any capital gain. He has not transferred the asset. He has not transferred any capital asset. His capital asset is destroyed. Such kind of decisions were given by the court in favor of taxpayer. Therefore, government decided to come out with two amendments. Number one, section 2 clause 47, definition of transfer. They inserted point number 2, saying that transfer in relation to capital asset also includes extinguishment of rights in the asset. So when your asset is extinguished, that will be considered as transfer. So that extinguishment word was inserted because of such kind of cases. And thereafter, at the same time, government also inserted section 45 subsection 1a. Government inserted section 45 subsection 1a. Here government said that definitely there is a transfer. You have to calculate capital gain, but we will not levy tax in the year in which capital asset is destroyed or demolished. We will levy tax in the year in which compensation is received by you from the insurance company. We will levy tax in the year in which compensation is received by you from the insurance company. And why we should levy capital gain tax? Say, for example, you might have acquired that building for 10 lakhs, but the market price of that building as on today is 50 lakhs. So insurance company is not going to compensate you 10 lakhs. Insurance company will be compensating you based on the market price which is relevant as on today, that is 50 lakhs. So definitely there is a capital gain. You had acquired the property for 10 lakhs. Insurance compensation is received for 50 lakhs. So you have to calculate capital gain. But only relaxation which we are offering is, we will levy tax in the year of receipt of compensation. We will not levy tax in the year in which your capital asset is destroyed or demolished. We will levy tax in the year of receipt of compensation. That much relaxation we are giving you. So government inserted section 45 subsection 1a, and in that section 45 1a, government has written a lot of different natural disasters. So whenever your capital asset is destroyed or demolished because of situations which are beyond your control, in that case also, if there was an insurance claim, you have to calculate capital gain. So let us quickly go through this. Capital gain in case of amount received from an insurer on account of damage or destruction of any capital asset. Where any person receives. What do you mean by receives? Capital gain will be taxable in the year of receipt of compensation. Where any person receives at any time during the previous year any money or other asset. See, sometimes the insurance company, instead of compensating you financially, they would compensate you by giving the asset only. Say for example, your car is destroyed, then insurance company will give you car only. That can happen. So either you may receive money or you may receive asset from the insurance company. If you have received the asset now, then for the purpose of calculation of capital gain, for this asset you take into account fair market value. You take into account fair market value. That fair market value should be considered as full value of consideration. See, this is not the asset which is destroyed. This is the asset which you are receiving from the insurance company in the form of compensation. Instead of compensating you financially, insurance company is compensating you by giving you the asset. So you have to calculate capital gain in the year of receipt of compensation. What should be taken as full value of consideration is money received plus fair market value of other asset received under an insurance from the insurer on account of damage or destruction of any capital asset as a result of. See, 4 points are given here. If your capital asset is destroyed or demolished because of these reasons only, then only section 45 subsection 1A will be applicable. What are these? Number 1, flood, typhoon, hurricane, cyclone, earthquake, or any other convulsion of nature. Now, please don't ask me what is flood, what is typhoon, what is hurricane, what is cyclone, what is earthquake. You might be knowing flood, cyclone, earthquake, hurricane, typhoon, all these things. Now you can go and search in a Google. Different types of natural disaster. That's all you need to remember. Riot or civil disturbance. Say for example, in your locality there is a riot. So in that riot your asset is destroyed. Or there is an accidental fire or explosion. Definitely fire is always accidental only. So there is an accidental fire or explosion. Point 4 is action taken by an enemy. Action taken by an enemy. Say for example, you are having your factory in the state of Jammu and Kashmir. In the border area you are having the factory. Now in border area always there is a border security force, that is military forces. But Pakistan, from the side of Pakistan, some terrorists have attacked in your area and they have fired some missiles kind of thing or small missile, not having a very big impact, that is fired and that fell on your factory building. So your building is destroyed or demolished in action taken by an enemy or action taken in combating an enemy with or without declaration of war. So even if war is not declared, terrorists have attacked your area and they have destroyed your property, you had an insurance policy, you received an insurance claim, you have to calculate capital gain. So what it says? Then profits and gains arising from receipt of such money or other assets shall be chargeable to tax under that capital gain and shall be deemed to be the income of such person of which year? Of the year in which money or other asset was received. A very important point, tax is levied on receipt basis. You should take into account money and you should take into account fair market value of other asset received. You take the total of both. Whatever money is received, take that amount. Whatever asset is received, for that you take the fair market value on the date of receipt of that asset. If you have received both, take the total of both. That will become your full value of consideration. And then you calculate capital gain in normal manner. I am just now referring to the last part of the question. Last part of the section. It says if the compensation is received for damage or destruction of any depreciable asset. Compensation is received for what? For damage or destruction of depreciable asset. Then compensation amount should be reduced from the value of the block or asset. In that case, you don't apply 45(1)(a). In that case, anyway, section 5050 will apply. So any asset which is forming part of block of asset on which you have already claimed depreciation, in that case, whatever is the amount of compensation received from the insurance company, it is as good as a selling price only. That amount should be deducted from the value of the block. Thereafter, the treatment should be given as per case 1, case 2, case 3, case 4, which is already discussed in example number 1 in the chapter of PGVP. Do you remember? So, our discussion with respect to section 45 subsection 1A has come to an end. Now listen to me carefully. If you refer to this events, na, point number 1, 2, 3, 4, one point is not covered here. One point is not covered in this section. I do not know whether government is skipped by mistake or it is intentionally not taken into account, and that is loss by theft. Loss by theft. Definitely your immobile property cannot be lost by theft. Your movable property can be. So if your plant and machinery, furniture, etc., there is a loss by theft, or maybe jewelry, etc. Jewelry, your personal jewelry is also a capital asset. If, say for example, theft has taken place in your house and your jewelry they have taken away, you have filed a police complaint, but police is not in a position to catch anyone. But you have taken the insurance for the jewelry. In that case, you calculate capital gain. You calculate capital gain. But you will calculate capital gain as per which section? Will you calculate capital gain by applying the provisions of section 45 subsection 1A? In case of loss of theft, in case of loss of capital asset by loss of theft, will you apply section 45 subsection 1A? Answer is no. Because loss by theft word is not written here. So in that case, which section will be applicable? Now general section 45 subsection 1 will be applicable. Tax will be levied on accrual basis. Is that very, very clear? Yes. So we have completed our discussion with respect to section 45 subsection 1A. So let's move on to one section. Actually, we are going to discuss two sections at the same time. That is section 50C, 50C and section 43CA. Both the sections I am going to discuss with you in detail. These sections in your textbook, they are given in the form of paragraph, as well as they are given in the form of flowchart. So theoretical paragraph they are given here, page number 187, page number 188, half page of 187, full page of 188, as well as page 189. So around 2.5 page, this entire information is summarized for you here in the form of a flow chart with the help of illustration. Everything is covered only in one page, that is page number 190. So I am going to discuss the provisions of section 50C as well as section 43CA with you from this summarized flow chart only. Before we actually move on to discuss, I will be giving you some background of section 50C. 50C is a very old section. 43CA is just introduced before 3-4 years. Let us first of all understand the situation. Say for example, here Mr. X is selling immobile property to Mr. Y. Mr. X is selling immobile property to Mr. Y. Say for example, this immobile property is nothing but his residential house property. And the consideration agreed is 100 lakhs, that is 1 crore. Consideration agreed is 100 lakhs. And they have agreed that out of 100 lakhs, 20 lakhs will be paid by check. Only 20 lakhs will be paid by check. Balance 80 lakhs will be paid in cash. See, whatever is paid in cash is black money. Whatever is paid in cash is most probably it is black money. Black money means on that amount, income was not taxed. Income was not on that amount of income, tax was not paid in the past years. That is black money. So Mr. Y is required to pay a consideration of 100 lakhs to Mr. X. This consideration of 100 lakhs is paid in two parts. One part is paid in cash, one part is paid by check. How much is paid in cash? 80 lakhs is paid in cash and 20 lakhs is paid by check. Whatever 20 lakhs is paid by check, this is the white money. And whatever 80 lakhs is paid in cash, this is the black money. You might be knowing that in case of property deals, huge cash transactions are there and huge amount of black money gets generated in the property deals itself. So what is the consequence of this? See, whatever is paid in cash, this will not be taken into account. This will not be shown to the government that this much amount is paid in cash. Only this amount which is paid by check will be taken into account. Agreement will be made for 20 lakhs. The 100 lakhs will be an oral agreement, understanding. But written agreement, what will be mentioned is 20 lakhs. That is only white money which is required to be paid by check. So in this case, what will happen now? The seller of the property will calculate the capital gain. And for calculating capital gain, he would take up 20 lakhs as full value of consideration. He will take up 20 lakhs as full value of consideration. Now the point is, he has shown the full value of consideration less na. Actually, he has sold the property for 100 lakhs, but is showing the full value of consideration only at 20 lakhs. So his full value of consideration is less by how much amount? His full value of consideration is less by 80 lakhs. His full value of consideration is lower by 80 lakhs. If full value of consideration is lower by 80 lakhs, definitely his capital gain will also be lower by 80 lakhs. In other words, on this 80 lakhs, they are not going to pay any tax to the central government. So who is losing? Who is losing revenue? Central government is losing revenue. Central government is losing revenue. On the other hand, whenever you sell and buy the property, you have to pay stamp duty to the state government. You have to pay what? You have to pay stamp duty to the state government. On sale or purchase of immovable property, a duty called as stamp duty is levied. That stamp duty is levied by the state government and the buyer has to pay stamp duty. Generally, practical life, buyer pays the stamp duty. So buyer will pay stamp duty on what amount? He will say that I have purchased a property for 20 lakhs. So he will pay stamp duty on 20 lakhs. So here, the stamp duty value, not stamp duty, agreement value which is mentioned in the agreement is lower by 80 lakhs. Since it is lower by 80 lakhs, government is not going to get stamp duty on this 80 lakhs. On these 80 lakhs, government is not going to get stamp duty. So in this case, who is losing? State government is losing. Central government is losing revenue in the form of capital gain because of lower capital gain tax, and state government is losing revenue because of lower stamp duty collection. This was the situation for years. Then came the Vajpayee government. BJP government, in fact NDA government was formed. I don't remember the year exactly, but it was from 98 to 2004 or something. During that, finance minister was Yashwant Sinha ji. Yashwant Sinha was the finance minister. He did meeting with all the finance minister of different state governments. He called all the state finance ministers and he shared this entire understanding with them, saying that we are losing capital gain tax and you are losing a stamp duty. So the finance ministry directed to the state finance ministers, saying that what you do now, in every state, ask the municipal corporation, respective municipal corporation, to do the survey, to conduct the survey and ascertain the market price of the property everywhere. So on the instruction of finance ministry, the state finance ministry instructed the local municipal corporations. Local municipal corporations appointed the officers, and officers conducted the survey in each and every locality. Survey was conducted with an intention to find out the correct market value of property in each locality. Then that market value was published in the form of a booklet that is called as reckoner. So in that reckoner is a book in which state government has published that what is the market value of the property. If you sell 1 square feet of land, 1 square feet of property in this locality, then the value should be at least 10,000 rupees per square feet. In that manner, the value was published in the ready reckoner. And ready reckoner is also called as reckoner value, or it is also called as circle rate. It is also called as circle rate. So, state government instructed the municipal corporation to conduct the survey and find out the market value of every property in every locality and publish that in the form of reckoner. That was published, and then state governments came out with a rule saying that if you come to us for registration of property, and if the agreement value of your property is less than what value is appearing in the reckoner, then we will levy tax, we will collect stamp duty on the reckoner value. Now say for example, in same example, the state government has published the reckoner. State government has published the reckoner. The value which is mentioned in the reckoner is also called as reckoner value, or also called as circle rate, also called as stamp duty value. The three different names used for same thing. Now say for example, this reckoner value is, in our example, the reckoner value is say 60 lakhs. You have sold the property for 100 lakhs. You are saying that I have actually sold the property for 20 lakhs. So you have made an agreement at 20 lakhs. You have accepted money by check only to the extent of 20 lakhs. Remaining 80 lakhs is taken in cash. So that 80 lakhs is black money that you are not going to show it to anyone. So you have made an agreement for 20 lakhs. Now state government says that your agreement value is less than the stamp duty value. That is your reckoner value or circle rate. So we are not going to take stamp duty on this 20 lakhs. We will be taking up stamp duty on 60 lakhs. This law state government came out with, saying that stamp duty will be on higher of agreement value and stamp duty value. Stamp duty will be on higher of agreement value and stamp duty value. See, in our case, agreement value is 20 lakhs, whereas stamp duty value is 60 lakhs. So the state government officer will collect the stamp duty value on what amount? He would collect the stamp duty value on 60 lakhs. So what has happened? To certain extent, the loss of state government is reduced. Loss of state government is reduced. Say for example, let me change this amount. Let me make it 80 lakhs. See, this 80 lakhs stamp duty value is nothing but the market price only. If you say that this is market price, then how can the seller get a buyer at 100 lakhs? No, because this survey is conducted once in 8 to 10 years. Market value will increase year after year, but survey is not conducted year after year. It is not conducted every year. It is conducted once in 8 to 10 years span. So, if the survey is conducted recently, then whatever stamp duty value is given, definitely that would correspond to the market price. But if say for example, survey was conducted in your locality before 4 years, at that point of time the value of property was 80 lakhs only, but thereafter the value of property has increased. As a result of which, as a result of not conducting the survey year after year, conducting survey only once in 8 to 10 years, still after introduction of this law also, there is some black money getting generated in the system. Now, generation of black money is reduced. Earlier, you sold the property at 100 lakhs, but you accepted 20 lakhs by check. So, 80 lakhs was the black money. Now, you know that the reckoner value, stamp duty value as per the state government is 80 lakhs. So, even if I even if I make an agreement for 20 lakhs, they are going to collect stamp duty on 80 lakhs. So, in that case, definitely person would like to make an agreement of at least 80 lakhs, otherwise he will have more black money. And this black money he cannot deposit in a bank account. He cannot deposit that money in a bank account. So after the introduction of this stamp duty law, what has happened is, to a greater extent, black money generation is reduced. It is not made 100%, it is not 100% reduced, but yes, to a greater extent it is reduced. By making this stamp duty law, state government, they have secured themselves. They have secured themselves. Now it is the turn of the central government to secure themselves. So, central government to secure themselves, to secure their revenue, they came out with section 50C. They came out with section 50C in the Income Tax Act, and in section 50C, they are just telling two things. If your agreement value is more than the stamp duty value, then for the purpose of computing capital gain, we will consider agreement value as full value of consideration, and accordingly we will calculate capital gain. For example, your agreement value is say 90 lakhs and your stamp duty value is 80 lakhs. So what will be considered as full value of consideration is 90 lakhs, because you yourself are saying, I have sold property at 90 lakhs. That is the reason you entered agreement at a value of 90 lakhs. Second possibility is agreement value is less than the stamp duty value. Please don't write anything. Everything is written in the book, and that too in a proper manner. So please don't waste your time in writing. Focus on understanding. If you don't understand the provision, then from referring the textbook you are not going to understand. So listen to me please. Don't copy the things. The same numbers, just numbers are changed. I have illustrations also. Don't worry about that. Second possibility is agreement value is less than the stamp duty value. In that case, government says we will take up stamp duty value as full value of consideration for the purpose of computation of capital gains. So for example, agreement value is say 70 lakhs and the stamp duty value is 80 lakhs. Then for the purpose of computation of capital gain, what government is going to take as full value of consideration is 80 lakhs. So by making section 50C, central government has secured themselves. They have secured their revenue. So state government made a stamp duty law for securing their revenue. Central government came out with section 50C for securing their revenue. So after this, revenue of the state government as well as the central government was secured to a greater extent. Black money generation in case of this deals with respect to immovable property was reduced to a greater extent. This law was introduced, I don't remember the year exactly, I think it was around 2002. Around 2002 this was introduced. Thereafter, over a period of time, It has got amended lot of times. So keeping in mind this background, now we will move on to understand the provision of section 50C, 50C. Now listen to me carefully. We are discussing two sections. One is section 50C and the other one is section 43CA. If you recollect the chapter of PGBP chapter, the range of section is from section 28 to section 44 dB. Range of section is from section 28 to section 44 dB. Section 43CA is part of PGBP chapter. But we are intentionally discussing with capital gain chapter along with section 50C because the provision is 100% same. Section 43CA provision and section 50C provision both are 100% same. Now listen to me carefully. When section 50C will apply and when section 43C will apply. First of all, you are having immobile property. You are having a immobile property. You are selling the immobile property. Now please understand, this section is not applicable to the buyer. This section is applicable to the seller because he is going to compute the capital gain or he is going to compute the business income. So this section is applicable to the seller. If seller is holding that building as a capital asset, then his income will be taxable under capital gain. In that case, we will apply section 5050C. But if the seller is a builder, he has constructed the building and is selling the building, selling the flats in that building, then those flats, they are not capital asset for him, they are stock in trade for him. In that case, by selling the flat, whatever profit he is realizing, he will pay tax under that PGBP, not under that capital gain. Therefore, for the chapter of PGBP, government has come out with a separate section, that is section 43CA. So which section is required to be applied? That depends upon whether the immobile property is held as capital asset or whether the immobile property is held as stock in trade. Immobile property is held as capital asset. The seller is required to calculate capital gain. Section 50C will be applicable. Immobile property is held as stock in trade. Seller is required to calculate business income. While calculating business income, section 43CA will be applicable. Now let us actually enter into the section. The very small flow chart kept in front of you. Now listen to me very carefully. Recently, in the last 2-3 years, there have been amendments in the provision. So I am trying to explain you. See, I am trying to explain you the practical difficulties in applicability of provision. If earlier the provision was very rigid, it was very rigid. Just before 3 years, government has relaxed the provision. So now the provision is no more rigid, it is slightly flexible. For example, stamp duty value of the property is 80 lakhs. Means as per the government, your property can be sold easily for 80 lakhs. If government says stamp duty value of the property is 80 lakhs, meaning thereby market value of the property when government conducted the survey was 80 lakhs. Now say for example, government had conducted the survey very recently. So this stamp duty value is actually reflecting the market price itself. Now my point is, do you believe that when you try to sell the property, you will get the buyer exactly for 50 lakhs? Will you get the buyer exactly for 80 lakhs? Will you get the buyer exactly for 80 lakhs? No. You may get the buyer for say 82 lakhs also. It all depends upon your marketing skills, na? Buyer has come to see your property. You convinced him that this is the best property in the town. School is near, everything is near. And this property, look at the outside the window. You are getting the view of the garden. When you get up in the morning, you need not switch on the lights. Sunlight only will be there inside the house. So you have convinced the buyer saying that this is the best property you can get, and somehow he was ready to pay you 82 lakhs. Another possibility is you tried to convince the buyer, and buyer told you just in the next building also I have seen the property. He is ready to sell it at 75 lakhs. So for your property I cannot give you more than 75 lakhs. But somehow you convinced him to pay 78 lakhs. So what I am trying to tell you is, government may say that the stamp duty value is 80 lakhs, but practically it is not necessary that you will get a buyer for 80 lakhs. You may get a buyer for a value which is more than 80 lakhs or maybe slightly less than 80 lakhs. So earlier there was no flexibility in the section. Section simply said that if the stamp duty value is even slightly more than the agreement value, stamp duty value will be considered as full value of consideration for the purpose of computation of capital gain. Thereafter, government introduced flexibility to the extent of 5%. And then government has increased the flexibility to 10%. Increasing flexibility means what? Government says, say for example, your stamp duty value is 80 lakhs. Your agreement value is 78 lakhs. Government says now you take out 10% of agreement value. 10% of agreement value will be how much? 7.8 lakhs. Yes or no? Now you take the total 78 lakh plus 7.8 lakh is how much? 85.80 lakhs. What is this 85.80 lakhs? This is nothing but 110% of agreement value. This is 110% agreement value. Now government says, if your agreement value is less and the stamp duty value is more, agreement value is less, it is 78 lakhs. Stamp duty value is more. What is the difference? Difference is 2 lakhs. Do you believe that difference of 2 lakh is less than 7.8 lakhs? Do you believe that the difference of stamp duty value and agreement value, which is 2 lakhs, is less than the 10% flexibility offered by you, offered by the government to you? Yes. In that case, government says, while calculating capital gain, we will consider a full value of consideration to be 78 lakhs. See, whenever stamp duty value will be considered as full value of consideration, you will have to pay tax on a higher amount. You will have to pay tax on a fictitious income. Just before 3-4 years, if I look at the provision just before 3-4 years, government said that stamp duty value is 80 lakhs, agreement value is 78 lakhs, so stamp duty value should be taken as full value of consideration. So you have to pay tax on what? 80 lakhs. But the actual selling price of the property is only 78 lakhs. So you have to pay tax on 2 lakhs without actually earning it. Therefore, government understood the practical difficulties, and then government came out with a flexibility provision saying that we are allowing a range of 10% as margin of safety. If the agreement value is less than the stamp duty value, but the difference is not more than 10% of the agreement value, then we will not take into account stamp duty value. We will take into account agreement value while calculating capital gain. So agreement value of 78 lakhs will be taken into account for computing capital gain. Agreement value will be considered as full value of consideration. Have you understood this? Yes or no? Okay. Now government says, say for example, I am changing the amount. Stamp duty value is 85 lakhs. Stamp duty value is 85 lakhs. Tell me what should be considered as full value of consideration? Is it within the, find out the difference? 78 lakhs and 85 lakhs, what is the difference? 7 lakhs. Is it within the range of 10% flexibility? Yes. So what will be taken as full value of consideration? The actual selling price, that is 78 lakhs. So in this case also, your agreement value is less, stamp duty value is more. But the difference is how much? 7 lakhs, that is less than 7.8 lakhs. That is less than 7.8 lakhs. So you are within the range of flexibility offered by the government. In that case, agreement value will be taken as full value of consideration for computing capital gain. Another possibility, your stamp duty value is 90 lakhs. Stamp duty value is 90 lakhs. What shall be considered as full value of consideration? Stamp duty value is 90 lakhs. What is the flexibility offered by government? 7.8 lakhs. That is 10% of your agreement value, which is 78 lakhs. So 7.8 lakhs plus 78 lakhs gives you 85.8 lakhs. Here, your stamp duty value is 90 lakhs, which is more than the margin of safety offered. Margin of safety is offered for 7.8 lakhs. So the total consideration, total amount comes to 85.8 lakhs. Government says if the stamp duty value is more than 85.8 lakhs now, then stamp duty value will be considered as full value of consideration. So in this case, 90 lakhs will be considered as full value of consideration. Have you understood this much? Yes or no? Yes. So now let us proceed further. Let us proceed. Let us read the flow chart now. Left hand side, we are saying that if the stamp duty value is less than equal to 110% agreement value. See, I have given example. I have bifurcated this situation in different parts. This is situation A. This is situation B. This is situation C1, C2, C3. For every situation, I have given you the illustration, example. Now, for example, we have stamp duty value of 25 lakhs everywhere. In all the situation, stamp duty value is how much? 25 lakhs. And now say for example, your agreement value is 30 lakhs. Agreement value is 30 lakhs. But you have to compare not with agreement value, you have to compare with 110% agreement value. If your agreement value is 30 lakhs, what will be 110% of that? 33 lakhs. 33 lakhs. So what do I say here? My stamp duty value is less than or equal to 110% agreement value. My stamp duty value in situation A is 25 lakhs, which is less than 110% of agreement value, which is 33 lakhs. So in this case, what is going to happen? Whatever you have actually earned, whatever you have actually received, that is agreement value, will be considered as full value of consideration. Agreement value will be considered as full value of consideration. Government says that your property can be sold easily for 25 lakhs. You have actually sold your property for 30 lakhs. Your agreement value itself is more than the stamp duty value. So in this situation, actually section 50C is not covering this situation. Only for your better understanding, I have created this. When the agreement value itself is more than stamp duty value, definitely agreement value. If agreement value is more than stamp duty value, definitely 110% agreement value will also be more than the stamp duty value. That is implied. If agreement value itself, see this situation, your agreement value is 30 lakhs, stamp duty value is 25 lakhs. Your agreement value itself is more than 25 lakhs. So 110% agreement value 33 lakhs will be definitely more than 25 lakhs. So in this case, 110% of agreement value will not play any role. So here there are only two parameters, agreement value, stamp duty value. If agreement value is more than the stamp duty value, then the agreement value will be taken as full value of consideration. Accordingly, capital gain will be computed. Yes, situation A is very much clear to you. Yes, let's move on to situation B, right hand side of the flow chart. Right hand side says what? Your agreement, your stamp duty value is more than 110% of agreement value. Your stamp duty value is more than, your stamp duty value is more than 110% agreement value. See situation B, situation C1, C2, C3, everywhere I have taken the agreement value as 20 lakhs. Agreement value is 20 lakhs. Stamp duty value is 25 lakhs in all these situations. Now government has offered you a flexibility of 10% of agreement value. 10% agreement value is how much? 2 lakhs. 2 lakhs. So government has offered you flexibility up to 22 lakhs. Flexibility is offered up to 10% of agreement value. In other words, they have offered you flexibility up to 22 lakhs. If your stamp duty value is more than 110% agreement value, then we will go to situation B, C1, C2, C3. Don't you feel in this case your stamp duty value is 25 lakhs, which is more than 110% agreement value? Yes or no? So in this case, section 50C will play the role. In this case, section 50C will play the role. Now read further what it says. Situation B is C1, C2, C3, everywhere agreement value is 20 lakhs, everywhere the stamp duty value is 25 lakhs. And 110% agreement value is 22 lakhs. Here the numbers are same. Situation B, C1, C2, C3, agreement value 110% agreement value, stamp duty value, everything is same. Now, see, possibility number 1, listen to me very carefully. Your agreement value is how much here? In our example, 20 lakhs. Your stamp duty value is how much? 25 lakhs. So now, when the seller and buyer they enter into an agreement, they will do the registration of the property with Registrar of Properties office. So, seller and buyer went to the Registrar of Properties office. Registrar said that you have entered into an agreement to sell the property at 20 lakhs, but as per our records, the reckoner value, the circle rate, the stamp duty value is 25 lakhs. So I am going to collect stamp duty on 25 lakhs. Which buyer is objecting? Buyer is saying that no, this your value is not correct. I am not ready to pay stamp duty on this. Officer says I will levy stamp duty on 25 lakhs only. So he has levied stamp duty on 25 lakhs. Now the buyer has challenged the state government officer. Registrar of Property is a state government officer. Buyer has challenged him saying that this 25 lakhs is not correct. This 25 lakhs is not correct. So stamp duty value is challenged by the SSE in any court or tribunal. Buyer has challenged this 25 lakhs. Buyer and seller both have challenged this 25 lakhs. Now seller has to calculate capital gain. Seller has to calculate capital gain. While calculating capital gain, what should be taken as full value of consideration? Income tax department says we will take 25 lakhs as full value of consideration. The seller is saying this 25 lakhs amount given by the state government is not correct. It is already challenged in the court of law. So there is a big question mark on this value of 25 lakhs. How can you take 25 lakhs? So income tax department says we cannot wait till the conclusion of the case. What we will do is, right now we will take 25 lakhs. We will calculate your capital gain. You pay the tax. Later on, if the court is giving some other judgment, say for example, court said that no, 25 lakhs is totally incorrect, 20 lakhs is the correct amount. 20 lakhs is the correct amount, 25 lakhs is totally wrong. If court gives us such a decision, in that case, I will revise your capital gain calculation in future. Whatever tax you have paid extra, I will refund you along with interest, don't worry. But right now, I can't wait for the state government, I can't wait for the court to conclude the case and give the decision. Court will give decision after 3-4 years. So we can't wait for 3-4 years for collection of taxes. So in situation B, we say that stamp duty value will be considered as full value of consideration. Subsequently, on conclusion of the case, income computation will be revised. In future, whenever the case is concluded in the court, whatever order court has passed, based on that, already calculated capital gain will be recomputed, taking into account the order of the court. Yes, have you understood this situation be very clearly? Yes. Now let's move on to the extreme right part. That is situation C1, C2, C3. Now listen to me very carefully. Here, the stamp duty value is 25 lakhs, agreement value is 20 lakhs. State government officer says that I will levy stamp duty on 25 lakhs. Now say for example, the stamp duty rate is 5%. So he is going to charge you 5% stamp duty on extra amount of how much? 5 lakhs. You have entered into an agreement at 20 lakhs. The stamp duty value as per the state government records is 25 lakhs. So state government officer is going to charge you stamp duty on 25 lakhs. In other words, he will charge you 5% extra on 5 lakhs extra. He will charge you 5%, not 5% extra, he will charge you 5% stamp duty on 5 lakhs of extra value. So how much you will have to shell out of your from my pocket? How much extra money you will have to shell out? 5% of 5 lakhs, that is 25,000. You will have to pay extra stamp duty to the tune of 25,000. You had an intention to challenge this in the court of law, so you went to a lawyer saying that this value stamp duty which the state government has given is not correct. Actual market price of the property is also less than this 25 lakhs. No one is ready to buy the property for more than 20 lakhs. How the government has find out this value? So lawyer says that no, such kind of cases we have seen practically. There are a lot of such cases wherein the state government has done the mistake in ascertaining the stamp duty value. So we can fight a case in the court of law and court will give decision in our favor only. Don't worry about that. That is what your lawyer says. So lawyer says that we will fight a case and we will definitely win the case. So lawyer is ready to fight the case. You also have the intention to file the case against the state government. So you are now asking the last question to your lawyer. Sir, how much fees you will charge? He says only 30,000 rupees. Now will you file a case? Will you file a case by paying 30,000 to a lawyer? Even if you win the case, your savings will be how much? 25,000. So to save 25,000, a person will be fool only if he is spending 30,000 rupees. So you decided not to file any case with the state government. You decided not to challenge this because anyway you are at a losing end. Even if you challenge and win the case, you will have to pay stamp duty value. Less stamp duty you will have to pay to the tune of 25,000, but you have to pay fees to your lawyer, that is 30,000. So you decided not to challenge the state government. Now comes the role of central government. The income tax department, while calculating capital gain, they are saying that we are going to consider this 25 lakhs as full value of consideration. So your full value of consideration will be more by 5 lakhs. Capital gain will be more by 5 lakhs. And this long-term capital gain is taxable at 20%. So if the capital gain amount increases by 5 lakhs, your tax liability will increase by 20% of 5 lakhs, that is 1 lakh rupees. The moment you realize that income tax officer is going to take 25 lakhs as the full value of consideration for computing capital gain, now you will have a regret. Now you will regret as to why did not I challenge the stamp duty against the state government. But now you can't go and once again challenge because there is a time limit to file the case in the court of law. That time limit has already expired. So in such a situation, you have not challenged the state government, but you firmly believe that the market value of the property is not 25 lakhs, it is less than 25 lakhs. In that case, government has come out with one option in section 50C, which says that you as an SSE can give an application to the income tax officer saying that we don't agree to the value of 25 lakhs, but we have not challenged the state government. But we request you to at least get the valuation of this property done by appointing a proper valuer. This option is available to you. So this paragraph says stamp duty value is not challenged by the SSE in the court of law. But SSE claim that the stamp duty value is even more than the market price. I cannot get this much amount of money for selling my property. It is impossible. The stamp duty value which the state government says is even more than the market price. In that case, SSE can request the income tax officer, assessing officer, to get the valuation of the property done from the departmental valuation officer. So you request the income tax officer will send your file to the valuation officer. Valuation officer will visit your place where the property is situated. He will inspect the property, he will talk to the estate agent in that locality, he will try to find out the correct value of property. And then he will submit the valuation report to the income tax department. In that valuation report, whatever value is given by the valuation officer will be called as DVO value. Will be called as what? DVO value. Means value determined by the departmental valuation officer. Value determined by the departmental valuation officer. Now you are having three values with you. Now we are having three values. Look at this example. Everywhere your agreement value is 20 lakhs. Everywhere your stamp duty value is 25 lakhs. Central government wants to take 25 lakhs for computing capital gain. But you requested them to get the valuation of the property done. Therefore, income tax officer has sent your file to the departmental valuation officer. He has done the valuation. Now he is submitting the report. In that report, the value given by the departmental valuation officer is 23 lakhs. Value given by the departmental valuation officer is 23 lakhs. The moment you look at the amount of 23 lakhs, what will be your reaction? What you will say? I told you earlier only, 25 lakhs is not the correct value. Market value of the property is less than 25 lakhs. Actually, this 23 lakhs is also on the higher side. But anyway, I am accepting this. So in that case, what shall be considered as full value of consideration? Value given by the departmental valuation officer will be considered as full value of consideration. Value determined by the DVO, departmental valuation officer, will be considered as full value of consideration. So now listen to me very carefully. Listen to me very carefully. What is DVO value? 23 lakhs. When this DVO value is more than the agreement value, DVO value is more than the agreement value, but DVO value is less than the stamp duty value. In that case, DVO value will be considered as full value of consideration. See, that rule is conclusion. Logically, you should think, I am not ready to accept the value of 25 lakhs. They got the survey done. Now they are saying that the value is 23 lakhs. Now you cannot challenge this. You only told to get the valuation done. Actually, market price of the property is 23 lakhs. I mean, you have sold it for 20 lakhs. It is your fault, na? Market price is 23 lakhs. Why you sold for 20 lakhs? So in this case, departmental valuation officer has given a value of 23 lakhs. The 23 lakhs will be considered as full value of consideration. Is that very clear? Situation C1? Yes or no? Okay, let's move on to situation C2. In situation C2, departmental valuation officer is given a value of 18 lakhs. You sold the property for 20 lakhs. State government says the stamp duty value is 25 lakhs. Departmental valuation officer has come out with a altogether different value, 18 lakhs. The moment you look at this 18 lakhs, you will start dancing in the income tax office only. But will they consider 18 lakhs as the selling price of property? Should they consider 18 lakhs? Saying that we will consider 18 lakhs as full value of consideration for computing capital gain. No, not at all. Why? Because the actual selling price of the property is 20 lakhs. You have sold the property, you have already received 20 lakhs in your bank account now. How can we take 18 lakhs as full value of consideration? So here we are saying that when the DBO value is less than the stamp duty value and is also less than the agreement value, in that case DBO value will be ignored. What will be taken as full value of consideration is agreement value. Agreement value is 20 lakhs, that will be taken as full value of consideration. See, your full value of consideration cannot be less than that, cannot be less than 20 lakhs, cannot be less than agreement value. Yes, situation C2 is clear to you? Yes or no? Yes or no? See, there are only two possibilities. Either you understood everything or you have not understood anything. You can't say that I have understood partly. So if you have not understood partly, then clearly say that you have not understood. There is no harm in telling that you have not understood. Shall I move on to the last situation? Yes, let us proceed. Departmental Valuation Officer DVO is giving a value of 27 lakhs. 27 lakhs. See, what is the situation here? Say for example, Deva madam is going to vegetable market. In that vegetable market, she has gone to purchase the potatoes. The vendor says that potato is 40 rupees kg. So Deva says, Anna, 40 rupees, very high price. Take some less amount, na? Reasonable price. So Anna says, you pay me 50 rupees per kg. She feels that 40 is very high and she is demanding that you reduce the price from 40 to 35 or 30 and is asking for 50. Similar is the situation here. You have sold the property for 20 lakhs. State government says the stamp duty value is 25 lakhs. You are not agreeing to that because you are saying that this is very high and the DVO says that actual value is 27 lakhs. So in that case, what will be your reaction? You will say that forget about the state government officer is half mad and your departmental valuation officer is full mad. The purpose of sending this request to the DVO was to reduce the value, na? He has increased the value. I don't accept this 27 lakhs. Forget, I never requested you to do the valuation. 25 lakhs is correct. That is what we will say. So in this case, 25 lakhs will be considered as full value of consideration. That is nothing but your stamp duty value. In other words, when your DBO value is more than the agreement value as well as more than the stamp duty value, you will be ready to accept the stamp duty value. So stamp duty value of 25 lakhs will be taken as full value of consideration. Is that very, very clear to you? Yes. Yes. Now let me now go through this paragraph, this next flow chart. Listen to me very carefully. Say for example, stamp duty value. Let me give you an exact information. Buyer and seller have entered into an agreement to sell and buy the property. Date of agreement. Date on which the agreement is entered to sell and buy the property. That date is, say for example, 1st April 2020. Now this agreement for purchase sale of property will be registered with the state government. Will be registered with the state government. Let me tell you that agreement value is 20 lakhs. How much is the agreement value? Agreement value is 20 lakhs. Date of agreement is 1st April 20. And when you went to the state government, when you went to the state government for registering the agreement, that date is called as date of registration of agreement. Date of registration of agreement. Let me tell you that date of registration of agreement is 1st July 20. Now listen to me very carefully. Your agreement value is 20 lakhs. Your date of agreement is 1st April 20 and your date of registration is 1st July 20. On this date of agreement, stamp duty value on date of agreement, that is 1st April 20, is set 25 lakhs. So when you entered into an agreement to purchase the property, the stamp duty value as per the state government records was 25 lakhs. But actually when you went to register your agreement, on that date, the stamp duty value was 30 lakhs. How it increased to 30 lakhs? Between this period April to July, April to July, a survey was conducted. April to July, survey was conducted in which your stamp duty value is increased to 30 lakhs. It is increased to 30 lakhs. Now the question is, you have two stamp duty values. You have one stamp duty value of the date of agreement, which is 1st April 20. You have another stamp duty value of the date of registration of agreement, which is 1st July 20. One stamp duty value is 25 lakhs, the other stamp duty value is 30 lakhs. And definitely both stamp duty values are more than 110% agreement value. Your agreement value is 20 lakhs. So if you take out 110% of agreement value, that will be 22 lakhs. So it is certain that your stamp duty value is more than 110% of your agreement value. So stamp duty value should be taken as full value of consideration for computing capital gain. There is no doubt in that. But you have two stamp duty value now. Now the question is whether you should take 25 lakhs or whether you should take 30 lakhs. This is the question. This is the question. So provision says, if you can prove that on this 1st April 20, you had the intention to purchase the property. Seller had the intention to sell the property and buyer had the intention to buy the property. On which date? 1st April 20. If you can prove us that you both had an intention of selling and buying the property, then we would take into account 25 lakhs. But if you fail to prove that on 1st April 20, you had an intention of buying, selling the property, then we would take up 30 lakhs. So now it is upon the buyer and seller to prove that they had an intention of buying and selling the property on 1st April 20. How it can be proved? So seller says, I had taken token money from the buyer. Do you understand the token money? whenever there is a transaction for sale of immovable property, token money is involved. Token money is a smaller amount of token which is given. Once the token is given, there is a commitment from the side of the seller that he will not find out some other buyer. He is committed to your transaction, he is committed to your deal. Token money is also called as advance. Yes. So, these people are saying that on 1st April 20, before 1st April 20 itself, buyer had given the token money to the seller. Oh, okay. What is the proof that token money was given? So, these people are saying that the buyer gave token money to the seller and seller gave the receipt saying that yes, this much amount of token money is received. Now, how this token money was given? Oh, this token money was given in cash. So, government says don't fool us. If you have given token money in cash, buyer is giving token money in cash to seller. Seller is making a receipt and giving it to the buyer. Such kind of thing can be done in the month of July also. So, in the month of July also you can make a receipt dated 1st April. It is all arrangement between seller and buyer. You can easily manipulate the things. You are creating receipt on your own. You are putting your signature. You are putting the date. So everything is in your control. You can easily manipulate. So we don't believe. If you say that the token money was received in cash, then we will not have any faith on you. We don't accept that. So another possibility is, buyer says that yes, I had paid the token money and that token money was paid in check only. I have the entry in my passbook. Now the question is bank passbook. Bank passbook. Can a buyer or a seller change the bank passbook? Who is passing entry in the passbook? Bank is passing the entry in the passbook. Buyer and seller doesn't have the control on that. If the buyer has paid the token money on or before 1st April 20 and buyer says I am having a evidence that I had paid the token money, see my passbook. So this passbook, in this passbook entry would have been passed by the banker. Therefore government says, yes, we accept that you had an intention to buy and sell the property on 1st April 20. In that case, we will accept this 25 lakhs. We will take this 25 lakhs for the purpose of calculation of capital gain. In other words, you have to prove that on the date of agreement, you had an intention to buy and sell the property. The only way to prove is you had accepted some token money either by way of account pay check, account pay bank draft, ECS, NEFT, RTGS, IMPS, debit card, credit card, etc. If you had accepted token money in cash or bearer check, then you can do such transactions backdated also. Government will not accept in that case. Have you understood this? Yes or no? Yes? If it is proved that they had an intention to buy and sell the property on 1st April 20, then government will take 25 lakhs as full value of consideration. If it is not proved, in that case 35 lakhs will be taken as full value of consideration. Let us now go through this. Stamp duty value of which date shall be considered for the purpose of determination of FEOC? Stamp duty value of which date means? Stamp duty value of date of agreement or stamp duty value of date of registration? Which stamp duty value? So here there are two possibilities. Number one, your date of agreement and date of registration are same. Your date of agreement and date of registration are same. In that case, you will not have two stamp duty values. You will have only one stamp duty value. So here there is no contradiction. There is no conflict. Are you understanding? Yes or no? Second possibility is Dixit, that will cover, don't worry. Token money is always part consideration only. You have to just prove that you had an intention of purchasing and selling the property on that date of agreement. Even if you have paid part consideration or you have paid even 100 rupees now, that is also fine. Just you show the entry that you have paid 100 rupees as token money, you will accept that the seller and buyer had the intention to buy and sell the property. The quantum of token money is not relevant. Even if it is 100 rupees, that is okay. But that should have been paid by account pay check, account pay bank draft, ECS, RTGS, NEFT, IMPS, debit card, credit card, BHIM, UPI, etc. Basically, it should have been paid through the banking system. If you prove that before the date of agreement token money was paid through banking system, then we have a faith on you saying that we will be taking up the stamp duty value of the date of agreement to be full value of consideration. So second possibility here is date of agreement and date of registration are not same. If they are not same, definitely the date of registration will be after the date of agreement. You can't register before making an agreement. So agreement will be made earlier, registration will be done later. Left hand side, we are saying that if either part consideration or full consideration, a part consideration or full consideration, do you understand that you take into account token money only? The part consideration is token money. Part consideration or full consideration is received on or before the agreement date, either by way of account pay check, account pay bank draft, ECS, or such other electronic modes. Other electronic mode will include NEFT, RTGS, IMPS, BHIM, UPI, debit card, credit card. If the consideration is paid before the date of agreement, then stamp duty value of the date of agreement will be taken into account because it is proved that buyer and seller had the intention of buying and selling the property before the date of agreement itself. Any other case, what do you mean by any other case? If the consideration or token money was paid in cash or consideration token money was not paid at all, if the consideration is received after the date of agreement or consideration is received on or before the date of agreement by any mode other than the prescribed mode of payment. So consideration was received in cash or bearer check, etc. In that case, you are not in a position to prove that you had an intention of buying and selling the property on the date of agreement. You are not in a position to prove. You would take up the stamp duty value of the date of registration. You will take up the stamp duty value of the date of registration to be full value of consideration for the purpose of computation of capital gains. Yes, have you understood this? Shall I proceed? So this section we have completed. Let me tell you that if the immovable property is held by you as capital asset, then section 50C will apply. Once again I am repeating. If the immovable property is held as stock in trade, then section 43CA would be applicable. So with this we have covered up the section 50C, 43CA, etc. Now I want to cover one budget 2020 amendment. Budget 2020 amendment. You move on to the definition of cost of acquisition, where it is given in our book on page number 174. On page number 174, there is a budget 2020 amendment. I will first explain you the provision. What is that amendment? And then we will refer to the actual provision. Listen to me carefully. You know that if the capital asset is acquired prior to 1st April 2001, then you have two options: actual cost of acquisition or fair market value on 1st April 2001. Out of these two, you can select whichever is higher as your cost of acquisition for the purpose of computation of capital gain. Yes or no? Is that very clear? This I am not explaining anything new. This is already covered many times. Say for example, you have sold your immobile property, land and building. That was acquired before 1st April 2001. And the actual cost of acquisition was 20 lakhs. Say for example, this 20 lakhs is the value of 1998 to 99. Or let me tell 1995-96. So you have acquired the property in the year 95-96 at a cost of 20 lakhs. Now 95-96, it is a long-term capital asset. You have to calculate long-term gain, but you don't have the index numbers from the year 95-96. You are having the index numbers only with effect from financial year 2001-2002. So government has given you option. You take your actual cost of acquisition, compare that with fair market value on 1st April 2001. Say for example that fair market value is 35 lakhs. So till now, what you used to consider cost of acquisition for computing capital gain? 35 lakhs. This was the provision up to last year. Now what change is made here? What change is made here? Government says you also find out the stamp duty value on 1st April 2001. See, immobile property sold na, then we are taking into account stamp duty value. We are taking into account stamp duty value for the purpose of full value of consideration. Government says in cost of acquisition also you take into account stamp duty value. So government says if your stamp duty value is say 30 lakhs, if your stamp duty value is 30 lakhs, but you are claiming that the fair market value is 35 lakhs, then government says we will not allow you to take this 35 lakhs as your cost of acquisition for computing capital gain. Now this amount is more than the stamp duty value, na? So you take into account stamp duty value only. So here you have selected higher of 1 and 2. But if this amount of higher of 1 and 2, that amount, if it is more than the stamp duty value, then you take stamp duty value as your cost of acquisition for computing capital gain. So up to last year, before the amendment, what you used to consider as cost of acquisition? 35 lakhs. Now after the amendment, what you will consider as cost of acquisition? Restricted to stamp duty value, that is 30 lakhs. So can I say your cost of acquisition because of the amendment, your cost of acquisition has fallen down by 5 lakhs? Yes or no? See, government simply says while calculating capital gain, in full value of consideration, we are taking into account stamp duty value, na? Then why should not we take into account stamp duty value even in cost of acquisition also? So that is the government, that is the logic of the government for introduction of amendment, and they are correct. They are exactly correct. So what is the consequence of this amendment on your pocket? That is what we need to understand. Up to last year, you were considering 35 lakhs as your cost of acquisition. Now you will be allowed to take only 30 lakhs because your stamp duty value is 30 lakhs. So your cost of acquisition will fall down by 5 lakhs. If your cost of acquisition falls by 5 lakhs, your capital gain will increase by 5 lakhs. Don't you feel so? If your capital gain will increase by 5 lakhs, your tax liability will also increase. Yes or no? So this amendment which has come It is working in the favor of government. It is not made for you, it is made for them. Read it carefully. With effect from assessment date 21-22, where the capital asset transferred is land or building or both, the fair market value of such asset on 1st April 2001 shall not exceed the stamp duty value. Fair market value shall not exceed the stamp duty value. In our example, what was the fair market value? 35 lakhs. That shall not exceed the stamp duty value. So instead of 35 lakhs, we should be taking 30 lakhs. 30 lakhs. Wherever available on such asset as on 1st April 2001. Stamp duty value means the value which is decided by the state government for the purpose of levy of stamp duty. That's all. Very small amendment, but very logical amendment and definitely in favor of the government. At the time of computation of capital gain, if in full value of consideration you are taking into account stamp duty value, then the stamp duty value should also be taken into account in cost of acquisition. This is logical. It is logical, but it is not working in your favor, it is working in the favor of government. Yes, have you understood this amendment? Yes or no? Deva is asking me question, sir, is this only for land and building? Answer is yes, because stamp duty value is only for land and building. Stamp duty value is always levied in case of only immovable property. Movable property, you don't have anything called as stamp duty value. Now I have question number 11 with me. Sarvana is asking me one question. Sir, what if the actual cost is higher? What if the actual cost is higher? Let me take that example also. See, actually, here we should not take higher of 1 and 2 and then compare with the stamp duty value. Actually, this is not the provision. Provision says don't select whichever is higher. Don't select whichever is higher and then compare. Provision says your fair market value cannot be more than the stamp duty value. If your stamp duty value is 30 lakhs, then you take 30 lakhs as fair market value. And then you select whichever is higher, that will be 30 lakhs. So don't select whichever is higher and then compare with the stamp duty value. Compare the fair market value with the stamp duty value. If your fair market value is higher than the stamp duty value, take the stamp duty value in place of fair market value. And then you select whichever is higher. This is the actual approach, this is the actual provision. Sarvana, I think now your doubt might be automatically resolved. Understood. If actual cost of acquisition is 32 lakhs. If actual cost of acquisition is 32 lakhs, fair market value is 35 lakhs, stamp duty value is 30 lakhs. Then what the provision says, refer to the provision. What it says, see the language of the provision, which page? 174. Sarvana, read the provision, what it says. Fair market value should not exceed the stamp duty value. Simple. Fair market value should not exceed the stamp duty value. If it is exceeding the stamp duty value, then in place of fair market value, you take stamp duty value. Simple. Now you tell me, Sarvana, I have taken your number here. 32 lakhs is the actual cost of acquisition. Fair market value is 35 lakhs. Stamp duty value is 30 lakhs. Do you believe the fair market value is more than the stamp duty value? Yes or no? Definitely yes. So you should replace the fair market value with stamp duty value. Remove this and put this stamp duty value there. Then you compare the stamp duty values with the actual cost of acquisition. What should be taken as your cost of acquisition for computing capital gain is 32 lakhs. 32 lakhs. Is that very clear? So let us quickly go back to that page number 191 in your textbook. Now see, I have question number 11 in front of me. I do not know if I give you this as homework whether you will try or not. Indexation will be done. Dikshit, indexation provisions are same, there is no change. Indexation is done after selecting whichever is higher, na? Whatever you consider as cost of acquisition, on that indexation will be definitely applied if it is a long-term asset. There is no change in the indexation. Amendment doesn't have any impact on the indexation. Now, I have question number 11 here. If you intend to try, then I will keep question number 11 for you. Try at home on your own and then we'll have a discussion tomorrow. But you should try. See, there is no point in keeping something as homework if you don't try. If you want, I can keep this as homework for today. You try this on your own and then tomorrow we'll have a discussion. But you should try, because today when we started the session, that one question was given to you as homework for trying, but you did not try because I did not get answer from any of you. So if you have an intention of trying, then only I will keep this question for you. Otherwise, I will solve right now. What should I do? Tell me. Yes. See, only if you try, na? Only if you try, you can do the mistake. If I solve in the class, chances of doing mistake is very less. If you solve on your own, there are chances that you will do the mistake, and then we will discuss tomorrow, you will realize which area you are doing mistakes. So right now, question number 11, I am leaving it as homework. Definitely that amendment which we discussed right now, that is also covered in this question number 11. So I am giving you question number 11 as homework. Try it at home and we will discuss tomorrow. That question is very good question, excellent quality question. Lot of points are covered here. Lot of points are covered. Even I don't want to waste my time right now in making you understand what all points are covered by the question. You refer the question at home, solve on your own. Tomorrow when we meet, we'll have the discussion on this. Now we move on to next section. On this section, I do not have any practical question in the notes. And I don't expect the examiner to ask you this in the examination. It is a provision more important at CA final level, having a lot of controversies. Therefore, I don't believe that the examiner should test at IPCC level, but still we are going to discuss in much detail. We will be discussing everything in detail. Listen to me very carefully. We are on section 45, subsection 5A. Capital gain in case of joint development agreement. This section was introduced with effect from assessment year 18-19. Forget about what is written here, just look at this diagram. Say for example, we are having an individual, Mr. Manoj. For example, Manoj is owning 20,000 square feet of plot of land. Manoj is owning 20,000 square feet plot of land in the city of Chennai. Now Manoj is in dire need of money. So Manoj decided to monetize his plot of land. For that, Manoj went to a developer of the property. Developer is a person who is having an experience of developing the property and selling the property. Basically, you can call him as builder. So Manoj is an individual. He is the owner of plot of land. He is going to a developer and he is doing tie-up with the developer. You know na, joint venture. Joint venture is a temporary partnership entered with a intention to do business and earn profits. So Manoj went to this developer and Manoj said to this developer that I am owning a land in the city of Chennai. I am having a plot of land of 20,000 square feet. I can give you that plot of land. On that plot of land, you construct a very big tower of 20 floors. In that 20 floors tower, you give me ground floor, first floor and second floor. Rest you can sell it. So developer is taking the land from Manoj. On that land, he is constructing a very big tower. In that building, he is going to offer ground floor, first floor and second floor to Manoj free of cost. Actually, it is not free of cost. Manoj has given plot of land. On that plot of land, property will be developed. As a consideration for his land, he is going to receive ground floor, first floor and second floor in the newly developed property. So in that new developed property, Manoj will have his share. His share is what? Ground floor, first floor, second floor. Besides, he has also agreed with the developer. The developer is going to pay him 5 crore cash. 5 crore he will do the cash payment, and in the new building, Manoj will receive ground floor, first floor and second floor. This deal is finalized. Say for example, this land and building was transferred by Manoj to the developer in the year 1516. Agreement was made between them. Agreement was made between them. This agreement is called as joint development agreement. Two persons are jointly coming together to develop a property. So the agreement which is entered is called as joint development agreement. As per joint development agreement, construction of this building is going to take 5 years. 5 years. So construction of the building will get completed in which year? 2020-21. 2020-21. Now my question to you is, in which year Manoj is transferring his land to developer? In the year 1516. So in that year transfer of land is done. Land is a capital asset pertaining to category 2, period of holding is 24 months. So Manoj has transferred this plot of land to a developer. So don't you feel Manoj should calculate capital gain? Manoj should calculate capital gain in which year? We should levy capital gain tax in the hands of Manoj in which year? Ideally in the year 1516. Ideally in the year 1516. But do you feel that if you levy tax in the Manoj in the year 1516, he will have money to pay the tax? He has given up his plot of land. In exchange, he has not received money. For example, he is just going to receive share in the developed property. He doesn't have money to pay the tax. If you levy tax right now, he will say that do whatever you want to do. You kill me, but I don't have money to pay. So this is the practical difficulty which these people, these individuals were facing. They did not have money to pay the tax, and income tax department calculated capital gain tax in the year 1516, and these department officers, they sent the notice to Manoj saying that pay this much amount of tax. Manoj says I don't have this much amount of money only. So such cases were happening in practical life. So Manoj was facing huge hardship in payment of tax because he did not have money. Therefore, government came out with section 45 subsection 5A with the intention to provide some relief to Manoj. Now, government in section 45 subsection 5A says, capital gain will not be taxable in the year in which you transfer the plot of land to a developer. Capital gain will be taxable in the year in which project completion certificate has been issued for the whole or part of the project by the competent authority. When this project will get completed in 2021. So once the project is completed, the municipal corporation will issue something called as occupancy certificate. Occupancy certificate is also called as project completion certificate. Only when you get the project completion certificate or occupancy certificate from the municipal corporation, you can get the electricity connection and water connection for that property. So by inserting section 45 subsection 5A, what government has done, government has postponed the collection of tax from 15-16 to 2021. Government has postponed the levy of capital gain tax from 15-16 to 2021. Why? Because 15-16 that year Manoj doesn't have money to pay the tax. Now you may think in 2021 from where he will get money? Because he is going to get share in the property now. So in 2021 also he will not have money to pay the tax. But in 2021 at least he can sell some portion of his property and realize money. In 2021 construction of property is over. So Manoj might receive his share in the property, ground floor, first floor, second floor. Manoj can sell ground floor, realize some money, utilize that money for the payment of taxes. That option is available to Manoj in the year 2021, but that option is not available to him in the year 15-16. Therefore, to provide some relief to Manoj, provide some relief to these people, they were facing huge hardship. So, to provide with the intention to provide relief to these people, government came out with section 45 subsection 5. Government says capital gain will not be taxable in the year in which plot of land is transferred. It will be taxable in the year in which project completion certificate has been issued by the competent authority. Have you understood this? Yes or no? For applicability of section 45 subsection 5, very important point is the owner of the plot of land, Mr. Manoj, should stay in the project till the date of issue of project completion certificate by the competent authority. Now say for example, this agreement is entered, joint development agreement is entered. Developer says that completion of construction would take 5 years. Manoj agreed, Manoj has signed the agreement. Thereafter, during the financial year 18-19, Manoj feels that developer will not be in a position to complete the construction of property up to 2021. I am fed up with this. I want to get out of this situation. So Manoj is searching some person who is interested to buy property in this new project. So Manoj has come to know that Ishwar wants to buy property in this project. So Manoj is contacting Ishwar. Manoj is saying Ishwar that in this project ground floor, first floor, second floor belongs to me. See, this is the allotment letter given by builder to me. I have given my plot of land to builder. In exchange of that, he is going to construct a building, and in that building, ground floor, first floor, second floor, he is going to give it to me. So if you want to purchase ground floor, first floor, second floor, I am ready to give that ground floor, first floor, second floor to you. But right now property cannot be sold because property do not exist. So whatever allotment letter Manoj had received from builder, that allotment letter Manoj will transfer to Ishwar in the year 18-19 and Ishwar will pay money. So now Manoj has taken exit from the project and Ishwar has entered. In that case, government says we will not wait for the completion of project. In that case, section 45 subsection 5 will not be applicable. In that case, immediately we will levy tax on Manoj. Section 45 subsection 5 is applicable. Section 45 subsection 5 is applicable only when the owner stays in the project till the date of completion of project. Have you understood this? Yes or no? Only if Manoj stays in the project up to 2021, section 45 subsection 5 will be applicable. And capital gain will be taxable in the year 2021. That is the year in which project completion certificate is received from a competent authority. Now the question is, what should be considered as full value of consideration? What amount should be taken into account as full value of consideration? Manoj has to calculate capital gain on what? He has to calculate capital gain on transfer of plot of land. In exchange of that plot of land, what he has received? He has received ground floor, first floor and second floor in the developed property. Whatever is the stamp duty value of that ground floor, first floor, second floor should be taken as full value of consideration for plot of land. So here it says stamp duty value of the SSE, not stamp duty value of SSE, stamp duty value of SSE's share in land and building or both. Means stamp duty value of ground floor, first floor, second floor. That stamp duty value of ground floor, first floor, second floor that you take, to that you add cash received. In our example, Manoj had received 5 crores in cash also from the builder. So you take the stamp duty value of ground floor, first floor, second floor. You also take 5 crore cash received. Take the total of A and B both, 1 and 2. Whatever amount is arrived, that should be taken as full value of consideration for the purpose of computation of capital gain on transfer of land. Say for example, stamp duty value of ground floor, first floor, second floor is 20 crores and Manoj has received cash 5 crores. So what will be taken as full value of consideration for transfer of plot of land? 25 crores. 25 crores will be taken as full value of consideration for the purpose of computing capital gain on transfer of plot of land. Have you realized this? Have you understood this? Yes? Can you just tell me what is the advantage of section 45(5)? What is the advantage of section 45(5)? Section 45(5) is just postponing the capital gain tax. Instead of year of transfer of plot of land, they are levying capital gain tax in which year? In the year in which project is completed. So, section 45(5)(a) is just delaying the capital gain calculation, that's all. Now, let me give you 2 important points, and with that 2 points this section will get completed. Point number 1, this point will get repeated once again when we move on to the chapter of TDS. Section 194 IC, which is the chapter of TDS, says that if Manoj is receiving cash from builder, in our example, Dikshit, Manoj has to pay tax in previous year 2021. Year in which project completion certificate is received, that is 2021. In that year itself, capital gain will be calculated, and in that year only he has to actually pay the tax. Yes? So Manoj has to pay tax in the year 2021. For that the condition is what? Condition is he should stay in that project till the project is over. Yes, shall I proceed? Dikshit? Okay. Now listen to me carefully. In our example, how much amount Manoj received from the builder in cash? 5 crores. On that 5 crores, builder is required to deduct 10% TDS as per section 194 IC. 5 crores is the amount of money received by Manoj from the builder, and on that 5 crores, builder should deduct 10% TDS. Builder should deduct 10% TDS in section 194 IC. This will be repeated when we move on to the chapter of TDS. And now I will ask you the last question, and this provision will come to an end. Manoj has received ground floor, first floor, second floor from the builder. Stamp duty value of that ground floor, first floor, second floor is 20 crores. Manoj has also received cash 5 crores. What will be taken as full value of consideration for transfer of plot of land? 25 crores. 25 crores. Now my question is, whatever share of the property Manoj has received, whatever share of the property Manoj has received, that is ground floor, first floor, second floor, if Manoj is selling this share of property in future, Manoj is selling this share of property in future, what he should consider as his cost of acquisition? Share in the developed property received by Manoj. If that share Manoj is selling it in future after 5 years, he has received the possession of ground floor, first floor, second floor. Now he has decided to sell ground floor, first floor, second floor. So he has sold ground floor, first floor, second floor. He will calculate capital gain, how much amount he should take as cost of acquisition is nothing but the amount which he had taken as full value of consideration in past. How much was the full value of consideration taken in past? 25 crores. So that same 25 crores should be taken as cost of acquisition for the purpose of computation of capital gain on transfer of developed property in future. That is written in section 49 subsection 7. That is written in section 49 subsection 7. Is that very clear? Yes or no? Now, situation A is actually not a provision. This is just created by me for the purpose of comparison. Situation B is the situation which was existing before the introduction of section 45(5). Before section 45(5) was introduced, tax was levied in which year? Tax was levied in the year in which land and building is transferred. Before introduction of section 45(5), capital gain was levied in the year in which land and building was transferred. So in situation A, I am saying, if the owner Mr. Manoj doesn't stay in the project till the completion of project, owner Mr. Manoj, he doesn't stay in the project up to the completion. I gave you an example. In 1718 itself, Manoj has gone to Ishwar. Manoj has gone to Ishwar and he has sold his share in the developed property to Ishwar before actually receiving it. Now construction will get completed in 2021. He will receive the physical possession of ground floor, first floor, second floor in the 2021. But in the year 2017-18 only, he is taking exit. And in place of Manoj, now builder will give ground floor, first floor, second floor to Ishwar. So Manoj has taken exit from the project before completion of 5 years. In that case, treatment will be given as per situation A. In that case, treatment will be given as per situation A. Yes. If the owner transfers his share in the project to any person on or before the date of issue of project completion certified by competent authority, what will happen? Capital gain will be taxable in the year in which owner transfers his share as per section 45 subsection 1. That is the general charging section. Year of transfer is the year in which capital gain tax is levied. Full value of consideration will also be computed in the normal manner. There is no change in the provision. Yes, have you understood this 45(5)(a)? Yes or no? Next is section 46(1) and 46(2). This I am not discussing right now. I will discuss with you in the chapter of income from other sources. This will be discussed in the chapter of income from other sources. Right now I am skipping this. Now, see this page number 198. Page number 198, we have section 50A. 50A is already over in the chapter of PGBP. We also have section 5050. This is also over in the chapter of PGBP. Do you recollect? Section 50. Capital gain on transfer of depreciable asset. Case 1, case 2, case 3, case 4, example 1. If you want to write, you can write here. Example 1. Example 1 in PGBP. Depreciation concept. Depreciation concept. Very good. Page number it is 110. It is page number 110. So section 50 is over. Section 50A, sale of asset by power generating unit. Sale of asset by power generating unit. This is also over. This is also over. Sale of asset by power generating unit. This is given on page number 115. Section 50A. This is over in PGBP chapter. Page number 115. Sarvana, 10% TDS will be applied only on section 194 IC. In section 194 IC, definitely only on cash component. Only on cash component, yes. If entire consideration is in kind only, then no TDS. TDS will not be applied. Is that clear? Sarvana? Okay. See, capital gain chapter is having lots and lots of variety of questions. It is impossible for me to take practical question on each and every concept. Nearly it is impossible. If I make practical question on each and every concept, it would require at least 30 to 35 problems. That also won't be sufficient. So those topics which are important from the examination point of view, we have tried to take practical questions. Rest we will discuss in the form of theory only. See, one more page you can read at home, page number 197. Actually, this is nothing but all those situations wherein fair market value is considered as full value of consideration for the purpose of computation of capital gain. On page number 197, all those situations, everywhere, anywhere in the chapter of capital gain, if we have taken fair market value of the capital asset as full value of consideration for computing capital gain, all those situations are accumulated and they are written at one place. Barter exchange, if you remember at the beginning of the chapter while explaining you definition of transfer in section 2 clause 47, I said that transfer includes a sale, transfer includes exchange. So 2 kg of gold is exchanged with 1 flat. That barter exchange, market value was considered as full value of consideration. Conversion of capital asset into stock in trade. Today itself we have seen the practical question. Transfer of capital asset by the partnership firm to the partner. So A, B, C point are over. D, E, F, these are yet to be discussed. D will be discussed in IFOS. This will be taken into IFOS. This will discuss when we move on to IFOS. I have skipped 46.1, 46.2. I have already told you that I will be covering up in the chapter of IFOS. So this topic you can take it for, you can mark it that this is over. This will be discussed separately. Now I move on to tax treatment of advance money forfeited. Tax treatment of advance money forfeited. Listen to me very carefully. Say for example, Mr. X and Mr. Y, they enter into an agreement to sell the property. They enter into an agreement to buy and sell the property. One second, if I have the example, see this house property chapter, I had explained you one point if you recollect. Person in possession of property in part performance of contract. But let me ask you, have you referred those 2 points from the definition of transfer which were given to you as homework? Yes? Definition of transfer, yesterday I gave you homework, na? Point number 5 and 6. Do you remember? Have you referred those 2 points? Point 5 and 6, I told you that it will be covered, it is already covered in the chapter of income from house property, section 27, deemed ownership. Move on to page 172. See this, 2 points I gave you as homework, na? Let us refer these 2 points now. Let us discuss this. See, point number 5 is what? Transaction involving allowing the possession of immovable property to be retained in part performance of contract. Listen to me carefully. Do one thing, I will not discuss point 5 earlier. First I will discuss point 6. First I will discuss point 6. What is point 6? Transaction by way of acquiring shares or becoming a member of cooperative society. Let us refer to this house property chapter section 27. Here I had explained you that if you want to buy the property, first option is you will go to the builder and you will make the down payment and you will book the flat. Moment you made the down payment, builder will start the construction. Then you will make the payment as per the schedule, as per the agreed dates. One day construction will get completed. Builder will hand over the possession of the property to you. Then you will occupy the property. All those people who have purchased the flat in the property, flat in that building, they would occupy their respective flats. Thereafter society will be formed and society will be registered. In that society, flats will be registered in the name of the person who has bought the flat. So here in this case, flats are registered in the name of individual owners. Concept of deemed ownership is not applicable here. Case 2, I told you that every one of you cleared CA intermediate as well as CA final. Then you had a get together. In that get together, every one of you have decided that every one of you want to buy the property. So Manoj was working with a builder. So Manoj was having an idea as to how much amount of profit the builder is earning. Builders are earning on sale of property. So you all decided that every one of you will contribute money. That money will be utilized for purchasing a plot of land. On that plot of land, we will get the building constructed and the flats will be then allotted to each one of you. So in this case, the group of individuals decide to construct the property. First of all, the society is formed. Every individual will give money to the society and society will issue the shares to the individual. Thereby individual will become the members of the society. Now society is having money. With the help of those funds, society will purchase the plot of land. On that plot of land, building will be constructed. Flats will be allotted to the members. In this case, society is the owner of plot of land. Society is the owner of plot of land. So on that plot of land, the building which is constructed, society is the legal owner of that building. Because the land is in the name of society, society is the legal owner. If the member is letting out his property and he is earning rental income, he would claim that I am not owner, so levy tax to me under that IFOS and not under that IFSP. Section 27 says that you will be considered as deemed owner and income from house property will be taxable in your hands only. This is what we had discussed in the chapter of income from house property. Do you recollect this? Yes or no? Yes? House property chapter section 27, do you recollect? This section 27 in house property chapter was from the point of view of buyer. Was from the point of view of buyer. Or we can say it was from the point of view of member of the society. Now in this case you tell me whether the individuals are owners of the property, the members of the society, do they own property in their own name? Can they sell the property? In second case, can they sell the property? In second case, they can't sell the property. Why? Because property is not registered in their own name. Property is registered in the name of society. Society was the legal owner of the plot of land. So whatever building is constructed on that plot of land, society will be the owner of that building also. Only for the purpose of charging tax, these individual occupants are considered as deemed owner. Now can they sell the property in future? Answer is no, because they don't own it. Now if they want to sell the property, what they will do? They will transfer their shares. They will transfer their shares. Their real intention is to sell the property only, but since they are not the owner of the property, what they are doing? They are transferring shares. The moment they transfer the shares, they are no more the member of the society. Since they are no more the member of the society, their right to occupy the flat is extinguished, is relinquished. So now, in this building, if you were the member of the society in this second case, and you have transferred your shares in my name, I have paid money to you, I have become the member of the society. Since I have become the member of the society, now I will have a right to occupy that one flat. In other words, wherever the land is in the name of society, property is in the name of society, if you want to sell that flat in the society, you cannot sell because flat is not in your name. Instead of flat, what you will do? You will sell the shares. You will sell the share of the society, but the real intention is not to transfer the shares. The real intention is to transfer the plot of land. Real intention is to transfer the flat itself. So in that case, you will have to pay capital gain tax. That is what they have explained here in point number 6. See what they have written. Any transaction, whether by way of acquiring shares or by way of becoming a member of a cooperative society, company or association of person, or by way of arrangement or agreement, this transaction has the effect of transferring or enabling the enjoyment of immovable property. You are one of the member of the society. You will transfer your shares to me. The moment you transfer your shares to me, you are no more the member of the society. I have become the member of the society. So the moment I acquire the shares in the society, I will become member. Along with membership, I will get the right to occupy that flat. So you have transferred the flat by transferring the shares. In that case, you will have to calculate capital gain. You can't argue that I am not the owner. Government doesn't want to argue you in that manner. That is the reason government has inserted point number 6. So government says if you transfer the shares of the society, that is as good as you are transferring the flat. Even though you are not the owner, what is transferred is your right to occupy the flat. Is that clear? Yes or no? Please respond. Shall I proceed to the next point? Okay. Now I move on to next point. And in this capital gain section 2 clause 47 definition of transfer, this is point number 4. This is point number 4. Listen to me. Here X and Y, they enter into an agreement. Deemed ownership concept is applicable only to house property. Yes, because this section 27 is part of IFHP chapter only. That is the reason in the definition of transfer, they have inserted this point as a separate and independent point. Na? Yes, deemed ownership point is applicable only in house property chapters. Let's move on to this point number 5. Person in possession of property in part performance of contract. Section 27 is made from the point of view of buyer. Section 27 is made from the point of view of buyer. From the point of view of seller, we have section 2, clause 47. We have section 2, clause 47, subclause 5. Subclause 5. So in the chapter of capital gain, section 2, clause 47, which is the definition of transfer, that includes the subclause 5. From the point of view of capital gain, in section 2, clause 47, subclause 5, the point which they have inserted, they have inserted from the point of view of seller. The house of property chapter, we discussed this thing from the point of view of buyer. Capital gain chapter, same thing is there from the point of view of seller. See, total consideration of property is 100 lakhs, token money is 20 lakhs, first installment, second installment, third installment, fourth installment is 20 lakhs. So entire 1 crore is paid in 5 installments. First installment is token money of 20 lakhs and then 4 installments of 20 lakhs each. Possession is transferred on 1st of March 2020. Fourth installment is paid on which date? 1st April 20. Registration and ownership is done on 15th April 20. So in the chapter of IFHP, what we understood now? Buyer has not paid the entire consideration. Before actually paying the entire consideration itself, on 1st March, up to 1st March, how much consideration is paid? 80 lakhs is paid. 20 lakhs is yet to be paid. So, buyer has not paid the entire consideration. Buyer has not performed the contract fully from his end. He is yet to pay 20 lakhs as consideration. But before paying that last installment of consideration, buyer has got the possession of the property. Possession is transferred and buyer has let out the property. He has earned the rental income for the month of March. Property is registered in his name only on 15th of April 2020. But he has received the possession of property on which date? 1st March 20. He is let out the property on which date? 1st March 20. So during the previous year 1920, he might have earned rent for 1 month, na, March 2020. He will say that I am not the owner, so levy tax to me under the IFOS. Government says you will be considered as deemed owner, tax will be levied to you under that IFHP only. Similarly, this was from the point of view of buyer, that is section 27. From the point of view of seller, same provision, same situation, everything is same. Question is, in which year seller should compute the capital gain? Should seller compute the capital gain in the year 1920? Saying that in the year 1920, he has transferred the possession of the property. Possession is transferred. Should he compute capital gain in 1920? Or should he compute capital gain in 2021? Saying that transaction is completed in 2021. Ownership is transferred in 2021. Registration is done in 2021. Question is, seller should compute capital gain in which year? So this point says seller should compute capital gain in the year 1920 only. What it says? When you have transferred the possession in part performance of the contract, in that case we consider it to be a transfer. See, read this. Transaction involving one second. Transaction involving allowing of possession. So what is transferred is possession. Possession of immobile property to the buyer in part perform the contract referred to in section 53A of Transfer of Property Act. In other words, the moment you transfer the possession, transfer has taken place. Even if the documents are not registered in the name of buyer, na, in the year of transfer of possession itself, you will calculate the capital gain. So in this case, in this example, capital gain will be calculated in which year? 1920, that is year of transfer of possession. Yes, tell me, have you all understood this? Yes or no? Yes, very good. So now let's move on to advance money forfeit at section 51. Page number 192 in your book. This also I will try to explain you with the same example. Same example with slight change. Listen to me carefully now. Same example I am taking with slight change. This time our intention is to understand what? Section 51, advance money forfeited. Yes, Sarvana, 1920 is the year in which capital gain effect will be given. In case of immobile property, year of transfer of possession is relevant. Year of transfer of ownership document is not relevant. Year of registration of document is not relevant. Registration of agreement can be done in future. Capital gain tax will be levied in the year in which possession of the property is transferred. Now, our intention is to understand the concept of advance money forfeited. Listen to me very, very carefully. Mr. X, Mr. Y entered into an agreement to sell and buy the property. This is the agreement to sell. No, Dikshit, you need not note down the example. These handwritten notes are already provided to you, na? These handwritten notes are already provided to you. for the chapter of house property, you can just write in your textbook saying that same example was given. Refer to section 27.5 example. That's all. You can just write refer to section 27.5 example. That's all. See, for explaining you the provision, I need the example. Once you have understood the provision, just by reading from the textbook, you will be in a position to recollect the example. But still, if you want to write, you can write there. House property chapter, point number 5, section 27, that example was taken. That's all. Why to write it again and again? Shall I proceed? Okay. Listen to me carefully. Which point we are discussing? We are discussing advance money forfeited. We are discussing advance money forfeited. Say for example, this is Mr. J. I'll write my name only. And this is Mr. M. Manoj. So we both have entered into an agreement to buy and sell the property. This is the way in which the agreement to sell is made. I am supposed to make a payment of 100 lakhs in 5 installments. I have paid a token money of 20 lakhs. First installment, second installment, third installment, everything is paid. Now say for example, this possession is not transferred. This point I am removing from here. Possession will be transferred here. That is after paying the entire amount. This is the slight change in the example. That's all. Otherwise, the entire example is same. So in this case, say for example, last installment of 20 lakhs. Now I was supposed to pay by 1st of April. As per the agreed dates, I have to pay the last installment of 20 lakhs on 1st April 20. Now say for example, I failed to pay the last installment of 20 lakhs on 1st April 20. So I have called up Manoj saying that, sir, our agreement was for 100 lakhs. I have already paid you 80 lakhs. The last installment of 20 lakhs, actually I have taken loan from the bank. The bank manager has gone somewhere on a holiday. So I can give you the check of remaining 20 lakhs only after the bank manager arrives and he puts his signature on a check. So Manoj says, no, not an issue. Don't worry about that. Such kind of immobile property deals, few days here and there, it is okay. So whenever you arrange the remaining 20 lakhs, you come and pay to me. Instead of say 1st April, I went to Manoj on 1st May. And I paid him 20 lakhs. Now Manoj has counted money and says me, how much is the amount? I told him 20 lakhs. Our deal was for 100 lakhs. I have already paid you 4 installment of 20 lakhs. So this is the 5th one. Manoj says, no. This installment of 20 lakhs you were supposed to pay on 1st of March. Today it is 1st of April. So you are already late by 1 month. Now you have not complied with the terms and conditions of this agreement. So I am an aggrieved person. I have the right to cancel this contract. If you want to buy my property, you do one thing. You pay me 5 lakh rupees extra. So now Manoj is demanding 5 lakh extra from me. He says instead of 20 lakh, you pay 25 lakhs. I said, no, I don't have that much amount of money. This also I have taken a loan. So I will not be in a position to pay you 5 lakhs extra. If you want, on 20 lakhs you charge me interest, 1% per month. Interest on 20 lakhs is only 20,000 rupees. How you are demanding 5 lakhs? So Manoj says, if you don't pay me 5 lakh extra, I will cancel this agreement. Because I am an agreed person, this agreement is voidable at my option. So I did not pay 5 lakh extra to Manoj, and Manoj has cancelled the agreement. He has thrown me out of his house. He is not ready to repay back whatever amount I have paid to him, and also is not ready to give me the possession of the property. So I have filed a police complaint in the name of Manoj. Now police has arrived. Police has given the clear instruction to Manoj saying that you have to repay all this amount. Either you give the property or you give back money. So Manoj has refunded, say, this first installment 20 lakhs, second installment 20 lakhs, third installment 20 lakhs. Fourth, I did not pay him because he was not ready to accept 20 lakhs. First installment, now that is a token money. The first token money, Manoj was not ready to refund back token money to me. Let me make the amount to be smaller one. Let us say that token money was only 2 lakhs. And the first installment was not 20 lakhs. It was 38 lakhs. Now, Manoj has cancelled this agreement because I could not pay consideration on time. And now Manoj is not ready to return me this 2 lakh rupees. This 2 lakhs, Manoj is not ready to return back to me. Can he forfeit this 2 lakhs? In the chapter of issue of shares, you learned, na? Company may demand call money from you. If you don't pay call money as per the due date, company has the right to forfeit your shares. Similarly, can Manoj forfeit my token money here? Yes. Because I have not complied with an agreement, Manoj can forfeit my token money. So Manoj said that this 2 lakhs, now I will not give it to you. This I am forfeiting. So this 2 lakhs is forfeited. And our agreement is cancelled. This 2 lakh is forfeited and our agreement is cancelled. This 2 lakh is called as token money forfeited. This is called as advance money forfeited or token money forfeited. So first of all, have you understood the meaning of advance money forfeited, token money forfeited? In case of immobile property, when your immobile property is a subject matter of negotiation and you could not comply with the terms and conditions, in that case, the seller of the property can cancel the agreement and he can forfeit the token money. Manoj has forfeited 2 lakhs token money. I requested Manoj, this you cannot do it to me. I am a teacher. I earn money by putting lot of efforts. 8 hours, 10 hours a day, we take lecture. So much amount of energy is involved. God will not leave you. You will have to pay the cost for these wrong deeds. So Manoj says, you move out of my house. He has thrown me out and he has forfeited token money of 2 lakhs. Now police also cannot do anything. Because police says this is the tradition, token money is forfeited because you did not make the payment now. This contract is cancelled because of you only. So Manoj has not returned this 2 lakh to me. Now the question is, this 2 lakhs is which nature of receipt for Manoj? Is it a revenue receipt or is it a capital receipt? So answer is, it is not a revenue receipt, it is a capital receipt. But can it be taxed under the capital gain? Yes, it can be taxed provided conditions of charging section are fulfilled. There must be capital asset, there must be transfer of capital asset, such transfer should be taking place during the previous year. But here, actually transfer of capital asset did not take place. Transfer of capital asset did not take place. This 2 lakh is forfeited. Capital asset actually did not get transferred. Section 45 subsection 1 charging section conditions are not fulfilled. Therefore, this 2 lakhs is not taxable in the year of forfeiture. This 2 lakhs is not taxable in the year of forfeiture. So my transaction with Manoj has come to an end. He has forfeited my token money. Now what happened now? Every day I used to go to temple. Every day I used to go to different temple. Monday to Saturday, every day I started going to temple. And whenever I go to different temples, I used to just pray to God saying that Manoj should pay very heavy price for this cheating he has done with me. So Monday I used to go to Lord Shankar temple. Tuesday I used to go to Ganapati temple. Monday to Saturday, every day different gods. And every day I used to go to temple and convince the god saying that Manoj has done cheating with me, you do cheating with him. So after 6 months, I got a call from a broker, from a estate agent, saying that, sir, you were interested in buying Manoj's property, na? You were interested because you like the property very much. So once again that property is being sold. So I told that estate agent that once again Manoj will do cheating with me. I don't want to buy that property. So that agent says, sir, Manoj has already left this world. Just 3 months back he died. So now the property is in the hands of Mrs. Manoj. You have a good chance if you want to buy the property because you are liking this property, you will never have a chance to buy this property. So if you are still interested, I will finalize the deal, but this time you make the payment on time. Then I thought that let us take a chance. So I gave my consent to the agent saying that you proceed with the transaction. So we had a meeting with Mrs. Manoj, and then once again similar kind of agreement was made. Once again all these installments were agreed. Entire story got repeated once again. Once again I did not pay the last installment on time. Once again Mrs. Manoj also forfeited my token money of 2 lakhs. I warned her saying that this time once again tomorrow morning onwards I am going to go to temple. You will also leave this world very soon. But she did not listen to me. Next day morning I started going to temple. This time God gave me a clear message that every time you are doing a mistake and every time you come to me, this time I am not going to listen to you. So this time 2 lakh is once again forfeited. So number 1, 2 lakhs were forfeited by Mr. Manoj. Number 2, 2 lakhs is forfeited by Mrs. Manoj also. Now I have promised myself, come what may, I will not purchase this property. It is very risky. Mr. Manoj, Mrs. Manoj, all of them are same kind of people, same nature. They have a nature of cheating to others, doing cheating with others. So finally, I did not enter into any agreement with them, but each one of them, they have forfeited my 2 lakh token money. After 1 year, this property got actually sold to Ishwar. Ishwar bought this property, and the moment I came to know that Ishwar is going to buy this property, I called up Ishwar and I said him that you be very careful because these people are cheaters. They will enter into agreement and they will forfeit your token money. So only if you have the entire funds with you, only then you enter into an agreement with them. So Ishwar entered into an agreement with them. Before that only he arranged all the funds. He paid the consideration before the due date. He took the possession and ownership of the property, and ultimately property was sold. Since property is sold, who will calculate capital gain? Mrs. Manoj will calculate capital gain. Yes or no? Mrs. Manoj would calculate capital gain. What will be full value of consideration? Actual selling price. Actual selling price. What should be cost of acquisition? What should be cost of acquisition of Mrs. Manoj? Actually, Mrs. Manoj, she has received the property by way of inheritance. Her actual cost of acquisition is 0. But here you have to apply section 49 subsection 1. Here you have to apply which section? You have to apply section 49 subsection 1. As per section 49 subsection 1, whenever you receive any property by way of gift, will, inheritance, succession, devolution or on partition of HUF, your deemed cost of acquisition will be cost of acquisition of previous owner. So what will be the deemed cost of acquisition of Mrs. Manoj? Whatever was the cost of acquisition of Manoj will become the deemed cost of acquisition of Mrs. Manoj. Now say for example, actual selling price of the property is 120 lakhs. Actual selling price of the property is 120 lakhs. Cost of acquisition of Mr. Manoj was say 20 lakhs. 20 lakhs. So this 20 lakhs will become the cost of acquisition of Mrs. Manoj. Now the point is, Mr. Manoj had forfeited token money in past na 2 lakhs. Mrs. Manoj Mr. Manoj had forfeited token money of 2 lakhs. Mrs. Manoj also had forfeited token money of 2 lakhs in the past. On that respective 2 lakhs, they haven't paid any tax because that was a capital receipt. Transfer of capital asset did not take place. Therefore, the condition of charging section 45 subsection 1 were not fulfilled. So, on these 2 lakhs, no tax is paid in the past. So, section 51 says, if any property was a subject matter of negotiation in the past year, but that agreement did not conclude, that deal did not conclude, deal was cancelled, as a result of which the seller had forfeited the token money. That token money should be deducted from the cost of acquisition. Which token money na? Token money which is forfeited by SSE. Let me write very clearly here. Token money forfeited. What is the total amount of token money forfeited? 2 lakhs plus 2 lakhs, that is 4 lakhs. Correct? Out of 4 lakhs, token money forfeited by Mr. Manoj is how much? 2 lakhs. Token money forfeited by Mrs. Manoj is, that is also 2 lakhs. Now section 51 says what? Listen to me carefully. Section 51 says, whatever token money is forfeited by SSE. Who is SSE? Mrs. Manoj is SSE. She is ultimately selling the property. So whatever token money is forfeited by SSE should be deducted from cost of acquisition. Should be deducted from cost of acquisition. This should be deducted from cost of acquisition. Token money forfeited by Mr. Manoj, that is previous owner na, this should be ignored. This should be ignored. Why it should be ignored? Because Mrs. Manoj says that money was forfeited by Mr. Manoj na. If you want tax on that 2 lakhs na, take tax from him only, I will not pay. We cannot send income tax department to heaven to collect tax from Manoj. So this 2 lakhs tax will not be levied. This 2 lakhs tax will be levied. How tax will be levied? This amount will be deducted from cost of acquisition. If I deduct this amount from cost of acquisition, my cost of acquisition will be 18 lakhs. In that case, my capital gain will be 108 lakhs. Forget about the indexation for the time being. Have you understood this much? Yes or no? Very good. So now listen to me carefully. This token money forfeited provision is given where? On page number 192 and 193. Page number 192. Token money forfeited provision is given here in section 51. Point 1, point 2, point 3. This is given in paragraph form. This is converted here in a small flowchart form. Don't look at the right hand side. Just look at the left hand side. Advance money forfeited, also called as token money forfeited. It is a capital receipt. It is a capital receipt. Hence, it is not taxable in the year in which it is forfeited. It is not taxable in the year in which it is forfeited. However, such advance money forfeited by SSE, forfeited by whom? Forfeited by SSE. In our example, who is SSE? Yes? Who is SSE in our example? Mrs. Manoj is SSE. What was the amount forfeited by Mrs. Manoj? 2 lakhs. That advance money forfeited by SSE, na? Advance money forfeited by Mrs. Manoj, that should be reduced from the cost of acquisition while computing capital gains. However, advance money forfeited by previous owner should be totally ignored. Have you understood this? Yes or no? Now listen to me very carefully. I am going to share a very important point with you. Lot of students are doing mistake at this point only. So if such thing is asked in the examination, be very alert. See, if this is a long-term asset now, if this is a long-term asset, you have to apply the indexation also. On the cost, you have to apply the indexation and assert in the index cost of acquisition. Point is, should you apply the indexation on 20 lakhs, then deduct 2 lakhs? Should you apply the indexation on these 20 lakhs? Calculate the index cost of acquisition. From that you deduct 2 lakhs advance money forfeited. Or you should first deduct 2 lakhs and on balance 18 lakhs you apply the indexation. So the point which I am trying to tell you is, there are two possibilities. Number one, deduct the token money forfeited, then do the indexation. Number two, first you do the indexation, then deduct the token money forfeited. Which order is required to be followed? So the correct order is, you have to first deduct the token money forfeited and you have to apply the indexation only on the balance amount. So you can't apply indexation on 20 lakhs and then deduct 2 lakhs. That is wrong. First deduct token money forfeited and then apply the indexation on the balance amount. Is that very, very clear? Yes or no? Have you understood this? Yes or no? Now you listen to me very carefully. Now I will be explaining you 3 amendments which were introduced in budget 2014. 3 amendments which were introduced in budget 2014. Why they were introduced and which are those 3 amendments, that we will discuss. See, in Income Tax Act, we have section 5151, which says what? If any immobile property was a subject matter of negotiation in past and that transaction did not conclude and token money was forfeited, in that case, as per section 5151, token money forfeited by the SSE should be deducted from the cost of acquisition. When he sells the asset in future. Now my point is, say for example, Manoj had forfeited the token money in the year 15-16. Mrs. Manoj had forfeited the token money in the year 17-18. And the property is actually sold in the year 2021. So while calculating capital gain in the year 2021, let me give you some old dates. One second. Manoj had forfeited token money in the year 2011-12. Mrs. Manoj had forfeited token money in the year 2012-13. Ultimately, property was sold in 2021. Now my question to you is, government has made section 51 which says that whatever token money is forfeited by the SSE should be deducted from the cost acquisition. But the point is, while calculating capital gain in the year 2021, if Mrs. Manoj does not deduct this 2 lakhs, how the government will come to know about it? Akash, the question which you are asking now, that question will be automatically that question will be automatically answered in this discussion. You just wait for few minutes. That will be automatically answered here. Once again I am repeating. Mr. Manoj forfeited token money of 2 lakh in which year? 11-12. Mrs. Manoj forfeited token money of 2 lakh in which year? 12-13. When the property is actually sold? 2021. What section 57 says? Whatever token money is forfeited in the past years, you should deduct from cost acquisition. But now my question is, what if Mrs. Manoj, while calculating capital gain in the year 2021, she does not deduct the token money from the cost of acquisition? In that case, she would claim deduction for the higher cost of acquisition. Her capital gain will be less, tax liability will be less. My point is, if Mrs. Manoj doesn't deduct token money from the cost acquisition, how government will come to know about it? Whether the government is having any mechanism to find out that these people have forfeited token money in the past? Are you understanding what issue I am raising? Yes or no? So the point is, government doesn't have any mechanism. Government doesn't have any mechanism to track the token money forfeited. So if some token money was forfeited in the past, and while actually selling the property, if the SSE does not deduct the amount of token money from the cost of acquisition, government will never come to know about it. In other words, on that token money, government is never going to get the tax. On this token money, government will never get the tax. That is what government came to know, that we have made section 51 since last lot many years, but till now, not even a single taxpayer has deducted token money from the cost of acquisition, because we do not maintain the track record as to which person has forfeited how much token money in the past. We don't have the records. So despite of provision in the Income Tax Act, government was not getting any tax on the token money forfeited. Therefore, in budget 2014, government inserted 3 amendments. Government came out with 3 amendments. Amendment number 1 was done in the definition of income. Section 2 clause 24. Definition was amended. Definition of income was amended. See, token money forfeited is not a revenue receipt. Token money forfeited is a capital receipt. So in budget 2014, government decided that we have the provision of token money forfeited in section 51. We are asking the seller of the property to deduct the amount of token money from the cost of acquisition if any token money is forfeited in the past, but actually no one is deducting, and we also are not coming to know about that fact. Therefore, we are not getting the tax on the amount of token money forfeited. Hence, from now onwards, we will levy tax on the token money in the year in which token money is forfeited. We will not wait for you to sell the property. Now onwards, we will levy tax on the token money in the year of forfeiture itself. So what was the past provision? In the year of forfeiture, tax was not levied. In the year of forfeiture, tax was not levied. And in future, when you sell the property, government asked you to deduct the amount of token money from the cost of acquisition. But no one was deducting, and government never came to know about that. So tax was evaded. So in budget 2014, government decided that now onwards we will levy tax on the token money forfeited in the year of forfeiture itself. Despite you not transferring any property, now in the year of forfeiture itself, you have to pay tax on token money forfeited in the chapter of income from other sources. We will take tax from you in the chapter of income from other sources, so that conditions of section 45(1), there should be capital asset, there should be transfer. Without applying those conditions, you will have to pay the tax. For executing this intention of levying tax on token money forfeited in the year of forfeiture itself, government did 3 amendments. Number 1, please understand that token money forfeited is a capital receipt. Tax cannot be levied unless and until you have a charging section. And in this case, you have a charging section, but the conditions are not fulfilled. And generally, capital receipts are not considered as income. That is what I had explained to you in the chapter of basic concept itself. So, with the intention to levy tax on this token money forfeited, that is a capital receipt, government changed the definition of income in section 2 clause 24. Here in the definition of income in section 2 clause 24, government says income includes token money forfeited. In the definition of income in section 2 clause 24, government says income includes token money forfeited. So now this token money forfeited is considered as income. Since it is now considered as income, government can make a charging section for levying the tax. So government has made a charging section in the head of IFOS, section 56 subsection 2 clause 9, wherein government says any token money which is forfeited will be taxed under the head income from other sources in the year in which token money is forfeited. See, now we are removed from the chapter of capital gain and government has thrown you in the chapter of IFOS. So those conditions, there must be capital asset, there must be transfer of capital asset, those conditions are not required to be fulfilled. Without applying those conditions, you have to pay tax under the IFOS in the year of forfeiture. Now my question to you is, listen, first of all, have you understood this? These 2 points, have you understood? Yes or no? Yes. Now listen to me, third amendment. Third amendment, section 51, proviso was inserted in section 51. What this proviso says? What this proviso says? Let me ask you a question. Say for example, if some token money is forfeited and that amount is offered to tax under IFOS and tax is already levied under IFOS, should we once again deduct that token money forfeited from the cost of acquisition in the year of transfer of capital asset? Or should we not do that? Have you understood the question? If already tax is levied on this token money under that IFOS, in future, if you sell this capital asset, should you deduct the amount of token money forfeited from the cost of acquisition? If you do so, that would amount to double taxation. That would amount to double taxation. Therefore, government inserted proviso in section 51 saying that if token money is already taxed under the IFOS, then it should not be deducted from the cost of acquisition in the year of sale of capital asset, in the year of transfer of capital asset. To avoid the situation of double taxation, section 51, below section 51, proviso was inserted. Proviso says token money forfeited in the past and already tax is levied under the IFOS, that token money should not be deducted from cost of acquisition. Have you all understood this provision very clearly? Yes? Now move on to the right hand side. I already told you that these 3 amendments were introduced in which year? Budget 2014. And let me tell you that these amendments were not prospective in nature. Sorry, these amendments were not retrospective in nature, they were prospective in nature. Means they were made applicable with effect from 1st April 14. They were made applicable with effect from 1st April 14. What are the 3 amendments? Token money forfeited is considered as income as per section 2 clause 24 definition of income. It is taxable under that income from other sources under section 56 subsection 2 clause 9. Such advance money forfeited. Such advance money means which advance money? Which is already taxed under that IFRS. Such advance money forfeited on which you already paid tax under that IFRS shall not be reduced from the cost of acquisition while computing capital gain. Shall not be reduced from the cost of acquisition while computing capital gain. Now, after all this discussion, you will have one question in your mind saying that what should we do about the token money? Should we reduce from the cost acquisition or should we pay tax under the IFRS? You tell us some conclusion, na? So there is no conclusion. The conclusion is you have to decide based on the date. You have to remember this date. Up to 31st March 14, treatment is different. On or after 1st April 14, treatment is different. So in the question, you will have to see the date on which the advance money is forfeited. If advance money is forfeited up to 31st March 14, then when you sell the capital asset, in that year, you deduct that token money forfeited from the cost of acquisition. Whereas, if the token money is forfeited on or after 1st April 14, then in that case, it will be taxed under that income from other sources. Is that very clear? So, both treatments are there. You have to see the date on which the advance money is forfeited. Based on that, you have to decide what treatment is required to be given. Yes? Have you understood this very clearly? Yes or no? Yes. So we shall move on to this practical question, which is given on page number 193. We will refer to this practical question and solve right now only. X purchases the house property on 8th September 1998. House property, is it a capital asset? Yes. Belonging to which category? Category 2. Period of holding applicable is 24 months. It is purchased on 8th September 98. Means it is purchased before 1st April 2001. It is purchased for 3 lakhs. Brokerage paid at the time of purchase is 1%. So this brokerage is required to be added to the purchase price. 1% of 3 lakh is 3,000. So your cost of acquisition will be 3,03,000. This was purchased for own residence. Further it says, on January 13, 2005, after 7 years, on January 13, 2005, he means Mr. X, enters into an agreement to sell the house to Mr. A for 5 lakhs after receiving a token money of 20,000. See, let us try to summarize the question here. Mr. A has acquired the property for 3,03,000 on 8th September 98. 8th September 98 means year of acquisition is what? 1998-99. Cost of acquisition is 3,03,000. Now he has entered into an agreement to sell the property. To whom? Sell the property to not A, seller is X. He entered into an agreement to sell the property to A. In which year this agreement is entered? 13 January 2005 means which year? 2004-5. 2004-5. He enters into an agreement to sell the house for 5 lakh after receiving an advance of 20. On A's failure to pay the balance within the stipulated period of 35 days, X forfeits the advance money of 20,000. He has forfeited the advance money. How much advance money is forfeited? 20,000. In which year it is forfeited? 4-5. So, token money forfeited equals to 20,000. It is forfeited in which year? 4-5. So, can I say it is forfeited up to 31st March 14? So, what treatment should be given to this? This should be deducted from the cost of acquisition when the property will be sold in future. Mr. X, if he sells the property in future while calculating capital gain, he should deduct this token money forfeited from his cost of acquisition. Now read further. Mr. X dies on 12th of October 2005 and as per his will, the property is given to Mrs. X. Mrs. X enters into an agreement to sell the property on 13th January 10. 13th January 10, she is entering into an agreement to sell the property to B after receiving an advance of 80,000. And on B's failure to pay the advance within 2 months, as per the agreement, the advance money is forfeited. So once again, advance money is forfeited. Mr. X dies. Mr. X dies. So property by way of inheritance goes in the hands of Mrs. X. Mrs. X decides to sell the property to Mr. B. Token money forfeited is how much? 80,000. In which year this is forfeited? Yes, 13 January 2010. That is 2009-10. See now, Mr. X has died. So token money forfeited by Mr. X, na previous owner, this 2 lakhs, sorry, this 20,000 will be totally ignored. No tax was levied in the hands of Mr. X. Tax will not even be levied in the hands of Mrs. X. So Mrs. X has also forfeited the token money. Further it says, thereafter Mrs. X enters into an agreement on 13th January 2015 to sell the property to Mr. C after receiving an advance of 2 lakhs and on C's failure to pay the balance within 2 months as per the agreement, advance money is forfeited by Mrs. X. So once again, this story is going on again and again. Mrs. X decides to sell the property to Mr. C. This time also token money forfeited. How much? 2 lakhs. Which is the year? 14-15. 14-15. Token money forfeited is 2 lakhs. Now, can you tell me what will be the treatment of this token money forfeited 20,000 by Mr. X? That will be totally ignored. Token money forfeited by Mrs. X in the year 9-10, that should be deducted from cost of acquisition. Yes or no? Minus this should be deducted from cost of acquisition. This is as per which section? Section 51. What is the treatment of this token money? This token money is forfeited during the financial year 14-15. So can I say it is forfeited in the on or after 1st April 2014? Yes. So this is taxable. Taxable under the head IFOS. Under section 56 subsection 2 clause 9. So under that IFOS, tax will be levied on 2 lakh rupees. So we are not supposed to levy the tax. Tax is already levied. Tax is already levied. Yes. Now read further. It says Mrs. X ultimately sells the property to Mr. Dawood. Now she can't forfeit the token money. If she tries, na, she will not be in this world then. Mrs. X ultimately sells the property to Mr. Dawood on 29th April 2020 for 25 lakhs. Brokerage paid is at the rate of 1%. Find out the capital gain chargeable to tax for the assessment at 21-22 on the assumption that the fair market value of the property on 1st April 2001 is 4 lakh rupees. Discuss whether the advance money forfeited by X and Mrs. X is chargeable to tax or not. So, what is the treatment of advance money forfeited by X? That is not chargeable to tax. No treatment. Advance money forfeited by Mrs. X, forfeited before, forfeited up to 31 March 14, deduct from cost acquisition. Forfeited on or after 1st April 14, taxable under IFRS. Yes? So, we shall proceed to solve this sum. Format for the solution is given on page number 225. So, you can move on to page number 225 simultaneously. Yes, question number 12. Now, listen to me very carefully. One very important point is required to be applied in this solution. Which point, tell me, if you could recollect? I will help you out to recollect. Do you remember one point which I explained you maybe yesterday, and I told you that CA Institute has removed all the questions pertaining to that point from the module. May 20 they had those points in module, May 21 they have removed. So now we don't have a single practical problem on such kind of points in the module. And definitely CA Institute is going to ask you question in the examination. Yes. Which case law? CIT versus Manjula Shah. This case law should be applied in the solution. So this solution you will have to make twice. First time we will make solution as per section 48 proviso 2, taking the indexation from the year in which asset is first acquired by the Mrs. X, SSE. Then you can make an alternative solution. In that you take the benefit of indexation from the year in which asset was acquired by the previous owner, Mr. X. So your final answer is going to change. So I am making the solution as per section 48 proviso 2. This solution is as per section 48 proviso 2. Here we will be taking up the benefit of indexation from the year in which capital asset is acquired by the SSE, that is Mrs. X. Are you understanding? Tell me what is full value of consideration? You have to refer to page number 193 also simultaneously. Yes, tell me what is full value of consideration? Yes, 25 lakhs, very good. Expense on transfer is brokerage, paid at 1%, 25,000. Net consideration is 24 lakhs, 75,000. What is the actual cost acquisition? Section 49 subsection 1 will be applied. Since Mrs. X has acquired this asset by way of inheritance from Mr. X, as per section 49 subsection 1, deemed cost of acquisition of Mrs. X would be nothing but the cost of acquisition of Mr. X, which is 3,03,000. Deva madam, not 3 lakhs, 3,03,000. Yes, What is FMV on 1st April 2001? Refer to the second last paragraph, it says that is 4 lakhs. Now you select whichever is higher out of these two. 4 lakhs. From this you deduct advance money forfeited by SSE. Advance money forfeited by previous owner should be totally ignored. Advance money forfeited by SSE up to 31st March 14 should be deducted here. What is that advance money forfeited? Yes, if you don't recollect, this is the amount 80,000 rupees. So deduct 80,000 here. So balance is 3,20,000. On this 3,20,000 you should apply the indexation. So 3,20,000 multiplied by indexation of the year of transfer, that is how much? Indexation of which year? 2021. That is 301. Divided by denominator index. Denominator index will be of which year? Year in which Mrs. X acquired the property. Line number 4 says X dies on 12th October 2005. That is financial year 56. So 56. 56, what is the index number? 117, is it? Yes. Get me the amount of index cost acquisition. $823,248. 8 lakhs 23,248. Index cost of improvement is not there in the question, na? So 0. Take the amount to the outer column. 8,23,248. Yes. Capital gain is how much? 16 lakhs 51,752. Yes, have you understood this? If you want, you can write the order. First deduct the amount, then you apply the indexation. Don't apply the indexation first and then deduct the amount. This is very, very important point. Day before exam, you have to revise. If you don't revise, you are gone. So let's proceed. Now let us discuss the treatment of advance money forfeited. Tax treatment of advance money forfeited by X. As per section 51, advance money forfeited by previous owner cannot be subtracted from cost acquisition or FMV. Further, it cannot be taxed in the hands of Mr. X because there was no transfer during their 4-5. In which year he forfeited? 4-5, yes. Also, it could not be considered as income from other sources because it is a capital receipt. So some of you might think that no, it can be considered as income from other sources. Na? Already we have a provision. But that provision is applicable only with effect from 1st April 14. Yes or no? Treatment of advance money forfeited by Mrs. X up to 31 March 14. Advance money forfeited by SSE shall be deducted from cost acquisition while computing capital gain. Yes? Next, tax treatment of advance money forfeited by Mrs. X on or after 1st April 14. This will be, such advance money forfeited will be taxable in the year of forfeiture under that income from other sources in section 56 subsection 2 clause 9. Such advance money forfeited should not be reduced from the cost acquisition while computing capital gain. Is that very clear? Yes. Now tell me, alternative solution as per CIT versus Manjula Shah. What will happen in this case? My full value of consideration, expense on transfer, net consideration, everything will remain the same. My cost acquisition will also remain the same, 320. Only the year of indexation will change, na? X had acquired the property before 1st April 2001. Therefore, indexation will be available from the base year 2001, 2002. So, 3,20,000. 3,20,000. Index cost acquisition will be 3,20,000 multiplied by 2020-21 indexation, that is 301, divided by indexation for the base year 2001-2002, that is 100. This will give you how much? 963,200. 963,200. Now you get me the amount of revised capital gain. Your net consideration is 24,75,000. 24,75,000 is your net consideration. From that you deduct 963,200. This is your index cost of acquisition. Balance will be capital gain 15,11,800. 15,11,800. This is our long-term capital gain. Yes, have you understood this? Yes or no? So with this we have covered up question 12. We also covered up section 51, advance money forfeited. Any one of you having any doubt? Shall I proceed? Yes, okay. Now we are going to discuss section 50B, slum sale. I will give you the background. Slum sale, section 50B. Section 50B, slum sale. Do you know the company Raymond? Yes? Raymond? If you hear the word Raymond for the first time, what comes to your mind? If you hear the word Raymond, what comes to your mind? Clothes. Clothes. What else? Some of you might remember the year since 1925. Some of you may remember the year Raymond since 1925. But yes, when you hear the word Raymond, what comes to your mind is cloth. See, Raymond has become such a strong brand that it has become a synonym for cloth. There are a lot of such strong brands in the market. For example, if you want to buy mineral water, you don't ask for mineral water. You will ask for Bisleri. You will ask for Bisleri. Similarly, if you want to buy a water purifier, you will not ask for water purifier. People will ask, I want to purchase AquaGuard. See, AquaGuard is not the name of the product. It is the name of the brand. But these brands, they have become so strong that people are now recognizing the product itself as a brand. The brand name they are using for buying the product. You go and buy the Bisleri. Even if the brand is different, that mineral water you recognize it as Bisleri only. Similarly, Raymond brand is so strong that the moment you hear the word Raymond, what comes to your mind is cloth. You might not be knowing this fact. I am sharing the fact with you. Raymond had started a cement business. Raymond had started a cement business. Raymond Group had started a cement business. They did cement business for 4-5 years. Excellent quality of cement, reasonable price, delivery mechanism also good, more number of dealers. Everything was up to the mark. But their cement was not getting sold in the market. So, Raymond appointed one CA firm, KPMG, to find out the reason why the cement business is not picking up. KPMG did research and they submitted his research report to Raymond. In that report, it was mentioned that people are associating this Raymond brand only with cloth. So if you sell Raymond cement, no one is going to purchase. Because what they can associate with the word Raymond is only cloth. Your brand has become such a strong brand that people can associate this Raymond brand only with a cloth. So KPMG recommended Raymond to close down this cement business and focus only on cloth business. And Raymond accepted this fact. They accepted the suggestion of the KPMG and they decided to move out of this cement business. This cement business was sold. This cement business was sold. Entire business was sold. Because Raymond decided to take exit from this cement business, entire cement business was sold for say 500 crores. When we say business is sold, in the balance sheet of Raymond, you will have assets pertaining to textile division as well as assets pertaining to cement division. Raymond is having cement business, textile business. So in their balance sheet, on the asset side, they will have assets belonging to cement division also, asset belonging to textile division also. Now they have sold entire cement business for 500 crores. When we say they have sold entire business, meaning thereby all assets are sold on an ongoing business. On an ongoing basis, entire business is sold. Means Raymond has transferred all the assets. They have transferred a fixed asset. They have transferred current asset. They have transferred current liabilities. Everything is transferred. So they have transferred multiple assets of the cement division. Land is transferred, building is transferred, plant is transferred, machinery is transferred, furniture is transferred, everything is transferred. No, it is not liquidation. Dixit, it is not liquidation. In liquidation, you shut down your business. They are not shutting down their business. They are selling off their business. So, Raymond transferred its business to someone else at a price of 500 crores. In other words, they have sold their land and building, plant and machinery, furniture, fixture, everything. But they do not know the selling price of land and building separately. They do not know at what price they have transferred the land, at what price they have transferred the building, at what price they have sold the plant, at what price they have sold the machinery, at what price they have sold the furniture, at what price they have sold the fixtures, at what value they have transferred their debtors. The values of individual assets, takeover price, selling price of individual asset is not known. What is known is combined selling price of all the assets. So Raymond sold the business and the question was, how should they calculate capital gain? First of all, is there any capital gain? Should they calculate anything? That was the question. But they did not have the selling price of individual assets. So they calculated capital gain in their own methodology. Income tax department picked up this case in scrutiny, and then department realized that we do not have any section in the Income Tax Act to calculate capital gain. If you sell the business, if you sell all the assets and liabilities at one stretch for a single lump sum amount, we don't have a provision in the Income Tax Act to calculate capital gain. Therefore, to cover up this case, government came out with a section 50B. So this section 50B is the outcome of this Raymond case. Government came out with a provision in section 50B, and here government explained how you will have to calculate capital gain if you are selling your entire division, if you are selling one line of business, in which manner you will calculate capital gain. So government came out with section 50B, concept of slum sale. Government inserted section 50B, government inserted section 2 clause 42C to define what is slum sale. So in section 2 clause 42C, government says slum sale means transfer of one or more undertaking for a lump sum consideration, without values being assigned to individual assets and liabilities. So individual assets and liabilities, takeover price was not assigned. A fixed amount of consideration of 500 crores was assigned. That 500 crores is nothing but a lump sum consideration. At the time of acquisition, you might have acquired assets individually, separately, but you are selling all assets at a total consideration of 500 crores. That is a lump sum consideration. In that case, government says you don't calculate capital gain on transfer of individual assets. You calculate capital gain on transfer of entire business. Your entire business is transferred for 500 crores. Now, you calculate capital gain on transfer of entire business. So, question arises, this entire business is sold. Now. So, this will belong to which category of capital asset? Category 1, category 2 or category 3? So, government says there is no need to explain this. It is implied that it will fall into category 3. Because it is not covered by category 1 and 2. So point number 2 says period of holding applicable in this case is 36 months. But you have to calculate period of holding for what? For the entire business, for the entire undertaking. Don't look at the period of holding of individual assets. On which date you had cutted the ribbon and you had inaugurated this cement division business, that would be the date of setup of business. On which date you have sold the business, that would be the date of transfer or sale of undertaking. You have sold the undertaking. So you take the date of setup of business, you take the date of transfer of business. Don't look at the period of holding of individual assets. Look at the period of holding of entire undertaking. If the period of holding is more than 36 months, long-term capital gain, long-term asset, long-term gain. If the actual period of holding is less than equal to 36 months, then short-term asset, short-term gain. How to calculate capital gain, that is explained here. You take the full value of consideration. In our example, what was full value of consideration? 500 crores. So that 500 crores will become the full value of consideration. This is sale value of entire undertaking. From that you deduct the amount of expense on transfer. You get the amount of net consideration. From that net consideration, cost of acquisition, cost of improvement, in place of cost of acquisition, cost of improvement, you deduct net worth of the undertaking. What do you mean by net worth of the undertaking? It is nothing but net assets. It is nothing but net assets. In amalgamation chapter is over. Amalgamation of companies. In that amalgamation of companies chapter, you might have calculated net assets. That net assets is nothing but net worth of the undertaking. That net worth you should take into account, and very important point to be noted here is this capital gain should be calculated without indexation. Why without indexation? Because mostly all the assets which are sold would be depreciable assets. They would be forming part of some block of assets. Any asset which is forming part of block of asset is a depreciable asset. On that you might have claimed a deduction for depreciation. And you know that in case of such asset, actually capital gain is calculated as per section 5050. And in section 5050, you know that there is no indexation. There is no indexation. So here also government says, here also most of the assets will be depreciable assets. So you don't take the benefit of indexation. You just calculate the net worth of the undertaking. Net worth is nothing but assets minus liabilities. Now the question is, how do you calculate the net worth? For that government has made some provisions. In practical life, you have to go to a chart accountant. He will do the calculation of net worth. He will give you a report, certificate in form number 3CEA. You need not remember this form. CA will provide a report in form number 3CA doing the computation of net worth. So you should at least know how to calculate. If some client comes to you in future, you should know how to calculate. So this is the statement of computation of net worth. Net worth is nothing but assets minus liabilities. First of all, you pick up the balance sheet. From the balance sheet asset side, you identify the assets of cement division. Those assets you classify into three categories. Category 1, depreciable assets, means building, plant, machinery, furniture, all those assets on which you have claimed depreciation while computing business income in past, those assets are depreciable assets. For those depreciable assets, you calculate the WDV as per section 43 subsection 6. You know how to calculate WDV. You just take up the actual cost. From that you deduct the depreciation as per the Income Tax Act. Once you deduct the amount of depreciation, the amount which is arrived will be called as WDV. This WDV, see, first of all you are picking up the amounts from the balance sheet. They are amounts as recorded in the books of accounts. So you pick up the original cost. From that you deduct depreciation by applying the depreciation rates given in the Income Tax Act and calculate the WDV. This is not WDV as per account, this is WDV as per income tax. So all the depreciable assets appearing in the balance sheet asset side and they are pertaining to cement division, you take the depreciable assets, take the cost, from that you deduct depreciation and you ascertain the WDV. Number second category of asset is those assets for which you have already claimed 100% deduction in section 35AD. What is section 35AD? Specified business. If you were in specified business, you might have acquired the asset, and for that entire cost of asset, you might have claimed deduction in section 35AD. If you have such assets, take the value as 0. Why? Because already entire cost you have claimed as deduction in section 35AD. Other assets. What do you mean by other assets? Other assets mean those who are neither falling into first point nor falling into second point, like current assets, debtors, bills receivable, bank balance, cash balance. For that you take the book value. Book value means value appearing in the balance sheet. So all the assets pertaining to cement division appearing on the balance sheet asset side should be classified into 3 categories. Depreciable assets, those assets for which you have claimed deduction under section 35AD, and the last one is other assets. Calculate the value of asset. For depreciable asset, take WDV. For assets for which you have already claimed deduction for entire cost in section 35AD, you write 0. Other assets, you write the book value, take the total. From that, you deduct the liabilities of the undertaking transferred, division transferred, and this liability should be taken at book value. Book value is nothing but balance sheet value. Deduct the liability, will get the amount of net worth of the undertaking or division transferred. That net worth of the undertaking transferred, you write here, deduct here in the form of cost of acquisition and cost of improvement. Consider that as cost of acquisition, cost of improvement. Deduct that amount. The balance amount is capital gain or capital loss. Short term or long term, depending upon whether the period of holding is less than or equal to 36 months or more than 36 months. Yes, have you understood this? Yes or no? Yes. Now listen to me very carefully. There is budget 2020 amendment. Budget 2020 amendment here. Very simple amendment. In fact, it is already discussed in the chapter of PGBP. In the chapter of PGBP, if you recollect, while discussing a lot of sections, we discussed, we also discussed the section 44AB, audit of books of accounts in PGBP chapter. In audit of books of accounts, you know that if you are a business organization and your turnover is more than 1 crore, it is mandatory for you to get your books of accounts audited. If you are a professional and if your gross receipts are more than 50 lakhs, then you have to get your books of accounts audited. Yes. Sarvana says limit of 5 crores is applicable. Yes. As per budget 2020 amendments, if the cash receipts does not exceed 5% of total receipts and cash payment does not exceed 5% of total payments, then the limit for audit is 5 crore instead of 1 crore. Now, once you get your books of accounts audited, the audit report is required to be submitted. Up to last year, that audit report was required to be submitted along with your income tax return. Now onwards, that audit report is required to be submitted at least 1 month prior to the due date of filing income tax return. Same to same amendment is there in this provision also. Here also, along with filing return, you were required to submit a CA report in form number 3CEA. Now this report in form number 3CEA is required to be submitted 1 month prior to the due date of filing income tax return. 1 month prior to the due date of furnishing income tax return. At least 1 month prior to the due date of furnishing income tax return, you have to submit this report in form number 3CEA. This is a chartered accountant certificate. Definitely is going to charge you money for this. So all this income tax certification work, you are going to earn huge amount of money in future. So before we actually move on to a practical question on this, let us go through some important points to be kept in mind. What if this net worth is negative? Can your net worth be negative? Yes? Definitely yes. When your liabilities are more than the assets. If your liabilities are more than the assets, then your net worth will turn out to be negative. In that case, you cannot take that negative amount in computation of capital gain. In that case, you cannot take that negative amount in computation of capital gain. In that case, your net worth will be taken to be 0. So, important point number 1 says negative net worth to be taken as 0. Point number B, contingent liabilities should be ignored because contingent liabilities are outside the balance sheet. They are not actual liabilities, therefore they should be ignored. Part of the undertaking should not be considered as an undertaking transferred. Say for example, Raymond had cement division. Cement division, they had 3 factories. One factory was in Maharashtra, one factory was in Rajasthan, and one factory was in say Karnataka. Out of these 3 factories, one factory they have sold, Karnataka factory they have sold. In that case, you can't say that entire undertaking is transferred. Only one of the branch, one of the factory is transferred. This should not be considered as slum sale. Slum sale means the entire undertaking is transferred. Point number D. See, I had given you example saying that Raymond has transferred the entire cement division at a price of 500 crores. Now, in the agreement, they will mention 500 crore is the total consideration. But when all the assets are transferred, land and building might also have been transferred. When you transfer land and building, you have to get the land and building registered in the name of new buyer. For that purpose, you have to pay stamp duty to the state government. For that purpose, it may happen that seller is separately writing the value of land and building for the purpose of stamp duty. Only for the purpose of payment of stamp duty, out of 500 crores, you have written that the value of land and building transferred is 80 crores. Total consideration is 500 crores, but in that 500 crores, value of land and building is 80 crores. Why you are separately identifying the value of land and building? Because the buyer is required to pay stamp duty on that. So, if the value of land and building is separately identified out of that 500 crores, that does not, in that case, we will not conclude that it is not a slum sale. Even if you identify the value of land and building separately, that is identified only for the purpose of payment of stamp duty. In that case also, for calculation of capital gain, section 50B will be applicable. Slum sale provision will apply. See, at the beginning we told that in case of slum sale, individual values, individual consideration for transfer of asset is not known, lump sum consideration is known. So we say that definitely lump sum consideration is known, but for land and building, if you segregate some value for the purpose of stamp duty, in that case, we will not throw you out of section 50B. We will not throw you out of section 50B. Just because you identified the value of land and building separately for the purpose of paying the stamp duty, we will not throw you out of section 50B. In that case, still section 50B will be applicable to you and you will be required to calculate the capital gain by applying the slum sale provisions. So, value can be assigned to individual assets for payment of stamp duty registration. A carry forward of unabsorbed depreciation that we will discuss in each chapter of set off. How to calculate WDV that we have already discussed here. So, this slum sale story is over. Now, we have a small practical question on this. This question is taken from ICI module. Now, I do not know, I have not seen May 21 module, whether May 21 module is containing this question or not. But this question is taken from ICI module only. So, if at all examiner is having an intention to ask you a question on slum sale, I strongly believe that it would be a ditto question number 13 only. Without even changing the numbers, he will ask you the same question. If at all he is a person who is ready to put some efforts, then he will pick up the question. Slightly here and there, he will change the numbers. Ditto question will be asked. Very important point I want to highlight here is, I have not explained you this point, I want to highlight this point. For these other assets, if some revaluation is done, revaluation of asset, you know, sometime you revalue the building, sometime you revalue the building, you revalue the land. So if some revaluation is done, that revaluation should not be taken into account for the purpose of calculation of net worth. Revaluation of asset should not be taken into account for the purpose of calculation of net worth. So let us move on to this question number 13 and let us calculate the capital gain on sale of slum sale by applying the provisions which we discussed in section 50B. Question number 13. Balance sheet of the company X Limited is given to you on 31st March 20. Software division, telecom division, cement division, there are 3 divisions. Thereafter it says on 1st April 20, X Limited decides to sell its cement division for 14 lakhs. So what is 14 lakhs? 14 lakhs is full value of consideration. The cement division was set up on 30th June 20. It was set up in 30th June 20. It is sold on 1st April 20. Definitely the period of holding is more than 36 months. So you have to calculate long-term capital gain. But yes, even in this case, you are not going to get the benefit of indexation. Even if it is long-term gain, you will not get the benefit of indexation. No indexation benefit will be given in case of slum sale. Revaluation also will be ignored. In the agreement to sell, company specifies that the land should be valued at 325 for the purpose of stamp duty by the purchaser. So, consideration is 14 lakhs. But in that 14 lakhs, 325 is identified as the value of land. But this value is segregated only for the purpose of stamp duty. So, you can't throw this company out of section 50B saying that you calculate capital gain in a normal manner. Even if you identify the value of land separately for the purpose of payment of stamp duty, still section 50B provisions will be made applicable to you. It is clarified in the agreement that this value has nothing to do with the consideration of 14 lakhs. The machinery which is transferred in this slum sale belongs to block of asset of plant and machinery on which depreciation rate is 15%. Why this depreciation rate is given to you? So that you can calculate the WDV. So that you can calculate the WDV of plant and machinery which is transferred under a slum sale. The WDV of block of asset of plant and machinery on 1st April 20 is 8 lakhs. Now you may think that this WDV is already given to me. Why should I calculate WDV? But this WDV is given for the entire company. And company is having software, telecom and cement division. What is transferred is only cement division. So you have to identify the WDV of depreciable asset for the cement division separately. Further it says company has acquired a new plant and machinery A on 30th June 20 for 2 lakhs and has sold machinery B on 31st December 20 for 6 lakhs 50. See, with this we are not concerned. If the question is asking us to calculate capital gain on slum sale, we should focus only on information relating to cement division. From the records maintained under the Companies Act 2013, company ascertains that the machinery transferred in the slum sale was acquired at actual cost of 5 lakh on 31st December 14. Why this actual cost of machinery is given to you? Why the year of acquisition of machinery is given to you? Because examiner knows that for depreciable asset, you need to find out WDV. Therefore, he has given you the original cost. Now you go on deducting depreciation for all the years up to 1920. But very, very important point to be kept in mind, at this point, more than 80% of the students may go wrong. Which point now? This asset was acquired on 31st December 14 for 5 lakhs. This date is on or after 4th October. So while you calculate depreciation for 13-14, half rule is required to be applied. If you don't apply the half rule, your WDV amount will be incorrect. If your WDV amount is incorrect, the net worth will go wrong. The moment your net worth amount is wrong, your capital gain will also be wrong. And if at all examiner is asking you to calculate the tax liability, that tax liability calculation will also go wrong. A small mistake will cost you at least 3 marks. If the question is asked for 9 marks, 10 marks, small mistake is going to cost you 3 marks. So now let us proceed to the, now we'll just do the calculation. I'll ask you the question, you should answer me. Don't refer to the solution. For this question, solution is already given to you in a printed form. Answer is also given. We are not required to do any calculation. On page number 226 and 227, solution is given. Don't look at that page. See, you can cheat me, you cannot cheat yourself. So, please don't look at page number 226 and 227. Let us do the calculation on our own. You should give me the answers. Tell me what is full value of consideration? Yes? What is full value of consideration? Oi! You are on which page? You should be on page number 195. Full value of consideration is 14 lakhs. Do you have any expense on transfer? Yes? No expense on transfer. So net consideration is how much? 14 lakhs. From this net consideration, you deduct cost of acquisition and cost of improvement. Your cost of improvement, cost of acquisition improvement is nothing but net worth of the undertaking. So make one working note for calculation of net worth. You deduct net worth, you will get the amount of capital gain. Which gain? Long-term capital gain. Even though you are calculating long-term capital gain, you are not going to get the benefit of indexation here. That you should keep in mind. Now let us proceed with our calculation of net worth. How do you calculate net worth? Assets minus liabilities. Page number 195. We are on the balance sheet asset side. Cement division, fixed asset. Calculation of net worth. Cement division, valuation of fixed asset. Tell me, this fixed asset should be taken at what value? 1,30,000 is appearing in the balance sheet asset side. But this fixed asset was revalued by 50,000. So we should not take into account this 50,000 na. So how much value we should take? Deva madam, not book value. We should ignore the revaluation. Do you recollect? Other assets, we should ignore the revaluation. So what value should be taken into account is 80,000, not 80,000. Yes, 1,30,000 minus 50, that is 80,000. Next is machinery, depreciable. 3,05,000 is WDV, but this is WDV as per accounts. We need WDV as per income tax. At what price this machinery was bought? 5 lakhs. On which date? 31st December 14. Yes or no? This is actual cost. 31st December 14. Let us deduct depreciation for which year? 13-14. Depreciation for 13-14. At what rate? 15%. So 5 lakhs into 15%, that is 15 upon 100 into 1 by 2 half. This is very important. Get me the amount. Filing into 15% is 75 into half is 37,500. 37,500. Now you quickly give me the WDV. Yes? What is the amount of WDV? I don't have the calculator, na? 462 500. Now deduct depreciation for which year? 14-15 to 19-20. Go on deducting. WDV method you have to follow. Less depreciation for 15-16. Less depreciation for 16-17. Less depreciation for 17-18. Less depreciation for 18-19. Less depreciation for 19-20. You go on deducting depreciation. Give me the WDV. WDV on 1st April 2020. Yes, tell me, what is the WDV? In your calculator, just do no minus 15%, minus 15%, minus 15%. All of you are getting 174, 432. 174, 432. Have you deducted depreciation even for 2021? Have you also deducted depreciation for 2021? You have sold the business on 1st April 20. So you have to deduct depreciation only up to 1920. 462 minus do 15% for 6 times. Give me the amount. One second. 14. One 174 432 is the correct amount. 174 432 is the correct amount. I want to make one change in the question. In the question, this date is given as 31st December 14. But in the solution, they have started calculating depreciation from 14-15. So I am changing the question. Instead of 31st December 14, 31st December 14 falls in which year? 14-15, na? Oh, solution also they have deducted depreciation from 14-15. Then how we are getting the amount of 174 432? How you are getting this amount? I said 6 times. 1 second. Oh, my mistake. Not 6 times, you should deduct depreciation 4 times. This depreciation is for not 13-14, is for 14-15. 14-15. So now you give me depreciation for, deduct depreciation 5 times. Yes. 6 times including 14-15. The 14-15 already we applied half rule, na? So depreciation only for 5 more years. 15-16, 16-17, 17-18, 18-19, 19-20. So we'll get the amount as 2,05,214. All of you are getting this amount, 2,05,214? Yes. So let us take this 2,05,214. 2,05,214. This is for machinery. Now let us move on to question. Next is debtors. Balance sheet asset side. Next amount is debtors. This we should take at book value 3 lakhs. Balance sheet value only. Next is stock. Stock should be taken at what value? Book value 1 lakh. Next is investments. This should also be taken at book value 80,000. Don't look at the market price of 1 lakh. Don't apply your accounting knowledge here. Whatever is said in income tax provision, that only you have to apply. Take the total of assets. 80,000 plus 2 lakh, 5,214 plus 3 lakh plus 1 lakh plus 80,000. 765, 214. Akshay has given me answer 765, 214. Same answer from 2-3 people, 4 people. Yes. From this, let us deduct liabilities now. What is the liability of cement division? Only creditors. Creditors. How much is that amount? 1 lakh. So deduct the amount of liabilities. Get me the amount of net worth of the undertaking. 6,65,214. Yes. This net worth should be deducted from net consideration. 6 lakhs 65,214. What is the amount of long term capital gain? 734, 786. 734, 786. Yes? Is that very clear? So we have completed this slum sale question. Till question number 13 we have completed. What I have given you as homework today? You have to solve one question in homework. What is the homework for the day? Which question I gave you as homework? Question number 11. Question number 11 I gave you as homework. Okay. So in question number 11 I want to make one change. Question number 11 which is given to you as homework na. In that question I want to make one change. Yes. This question is given to you as homework. I want to make one change here. BS sold the house on 30th November 20. It says BS sold the house on 30th November 19. Na? That is wrong. Transfer should take place during the previous year 2021. Na? So this date 2019 is wrongly appearing here. You should make it 2020. So this is the error in the question. Number 1. And number 2. I want to make this last line. It is further given that assistant registrar has adopted the value of this house as 55 lakhs for the stamp duty. Instead of 55 lakhs, I want to make 56 lakhs. Instead of 55 lakhs, I am making this amount as 56 lakhs. These two changes I have done to question number 11. Question number 11 I have done two changes. Yes. Have you made these two changes to the question? Yes or no? Yes. Okay. So we'll wind up here. Tomorrow morning when we meet, you should have the solution of question number 11 with you. Thank you very much.